All right, everything looking good. Should be live. Let's go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8 p.m. Eastern Standard Time on December 19th, 2021. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so obviously a lot going on, like always. Last couple weeks of the year here. Lots of excitement coming up on the holidays, Christmas, New Year's, and obviously just preparing for our, end of year wrap up, as well as, starting off fresh for a new one. So this is obviously a crazy time with all those different factors normally. And then on top of that, we have all the absolute craziness going on in all the different markets. We have everything going on with the Federal Reserve, the Treasury, politics in general. So it is a wild time. And that doesn't even take into account like the, panorama, which one I'm talking about. The panoramic Pandorama, Pandora's box that was unleashed on the world by Dr. Fauci and his buds. But anyway, full speculation on that one. Let's skip over that and just jump right in here, because there's a lot going on. But if we just kind of like sift through all the BS, we can really see what's happening, and we can really find out what's happening, and we can use not only the fundamentals that we normally use to break things down, but the technicals to give us a clear and concise picture of what is taking place and how to position ourselves accordingly. Because that's the difference between what we do, what I do, and what other people do is. Part of what makes me, not to float my own boat here, but so effective, so efficient, so successful at technical analysis, trading, investing, is I have clear, definable ways of determining things. I have clear risk reward. I have clear probability of success. I have clear indicators and oscillators that I use over and over again. I'm not constantly changing between them. I'm using the same thing over and over and over again to do measured things. And then I can eliminate the things that are not working, and I can weight heavily the things that are working. So, again, this is not financial advice, but one of the biggest things you should do, have a trade journal. What do you write in the trade journal? Well, write a trading plan. Definable reasons why you're going to enter trades, what your targets are, what your risk reward is, your probability of success. Are you trading with or against the trend? When you're going to know, like, if you're right and take profits, and what percentage of profits along the way. When you're going to know if you're wrong and get stopped out of that trade. Having these definable things is what makes the difference between success and failure over a long period of time. Because anyone can succeed over a short period of time. But over a long period of time, you have to have an actual plan, and you have to hold yourself accountable, because that's the beauty of trading is you don't have to rely on anyone else. But at the same time, when shit goes sour, and it will go sour for everyone all the time, you could win a bunch of trades in a row, but you could also lose a bunch of trades in a row. No matter how good you are, trades can always go against you. And sometimes a bunch go against you in a row. Not often. It's not likely. But when it does, you have to have the strength. You have to have the resolution. You have to be confident that what you're doing is correct and will work. You're just having a bad string of luck. And that's okay. It happens to everyone. But if you don't have the confidence, if you don't have the measurable way of determining, all these different things, if you can't look back through your trade journal and say, okay, hang on, I just was wrong 7 out of 10 trades. Is there something going on here? Did something change? Am I doing something wrong? Is the market just shifting and I'm not shifting with it? What is going on? And if you don't have those things written down, you might not remember, why did I enter that trade on Robinhood? Why did I long Matic? What's going on with Ethereum? Whatever it is that you're trading, you could look back and say, I entered this trade because of X. My target is this price. I will take this much profits at that level. My second target is this price. I will take this much profits at that level and move my stop loss up to X. I'm taking the trade because of this, but if the trade goes against me, I only need the price to go down this much to this level before I know that I'm wrong. It invalidates my theory on the market, on the trade, etc., and I will take the stop loss. What's the probability of success? Is it just a 50-50 coin toss? Am I trading with the trend, therefore I have an advantage? Am I buying support? Am I selling resistance? Am I, all these different things. And the more, a lot of people want to trade as a job, but they don't want to treat it like a job. You can't go to your job and just wing it. You don't just show up at your job, fucked up in the middle of the afternoon. You don't get high and go to work. You don't get drunk and go to work. You don't just start working and then just drop everything and go out to meet your buddies at the bar or, watch some TV or whatever. No, you treat it like a job. You have, definable specific hours. You have, rules that you hold yourself accountable for. You have goals, you have targets, you have all this stuff. And when you start treating it like that, the same way that if you were going to start a business, you would start treating that business like you would treat a job and hold yourself accountable for it. And then one day, once you are having a sustainable amount of success over time and generating income and, you could see yourself doing this full time, maybe then you start pulling back from your traditional job. Maybe then you start, moving on and putting more energy into this than the other. But you don't just say, I'm going to quit my job and start a business tomorrow with no customers, no sales, no ideas, no marketing, no plan. So trading should be the same way. And for me, I have definable ways of determining these different things. And that is the key. And it's taken me years and years and years to build these things up. And I can't even say perfected because it's an ever-growing thing, an ever-evolving thing. So let's jump in here and let's talk about something very important. We're going to start with crypto today. All right, because something changed with crypto here and no one's talking about it. And this is a specific reason that I talk about this stuff is I'm giving you guys the master class. Okay, this is exactly how I determine trend of a crypto, of a stock, of anything. And the most important thing to remember is I have a definable way to determine a trend, and I respect that. And regardless of what my feelings tell me, regardless of what the fundamentals tell me, regardless of what I want to happen, what I hope will happen, what I need to happen, I trust this definable way of determining trend. So before we get started, we're going to take a look at Bitcoin here. I want to remind you, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. You might not agree with what I'm about to say, but I'm telling you what I do, how I do things. And I'm going to explain to you exactly how this indicator that I designed to literally quantify my determinant of trend works. So today I'm going to go through a deep dive on the TJD master. We're going to do a few minutes on this and then take a look specifically at this. And then we're going to see what it's telling us about, Bitcoin, crypto, etc. So the TJD master has multiple components. Each of the components is simple enough on its own. But as you can see here, the purpose of this is to define the trend. So we have two blue moving averages. We have the bright blue and the darker blue. That's the 200 exponential moving average and the 200 simple moving average. The only difference between those is when I switch time frames, they both look back 200 periods. So I'm on the daily time frame right now. So what that does is it takes the last 200 days, it adds all of them together, whatever the price was at close on each of those days, and then it divides it by 200, and then it gives me the average. And then it plots that line right there. And then the next day it does the same thing and the same thing and the same thing and the same thing. And it just keeps going like that. The 200 exponential moving average versus the simple, the difference is with the simple, every one of those days is weighted evenly. With the 200 exponential, part of the formula for the 200 exponential moving averages is that the most recent time frame has a higher bias of importance. So what that means is the day 200 days ago, the last day before it drops off, is weighted less important than the most recent day. So what happened yesterday is more important than what happened, 200 days ago. And that makes sense because, especially when we're looking at cryptos or more volatile assets, it makes sense to use the 200 exponential because the moves tend to be more violent and, more aggressive. But by using both of these, we gain an advantage over the market because there's a certain number of people that use simple moving averages. There's a certain number of people that use exponential moving averages. And the rationale being the 200 simple moving average is what Wall Street's used. It's what they've used since the beginning of time. Since there was a quantifiable moving average, since back in the day where they literally would hand calculate these and plot them by hand on a chart and figure out the moving average and then determine, were we in an uptrend or a downtrend? Should you buy or should you sell, etc. So the 200 exponential moving average is more popular in crypto and, more volatile markets. So by using both those, we're taking into account what everyone that's using a 200 moving average, whether it's exponential or simple, is looking at. So now how do we decide though? Sometimes we break below one and we find support at the other. Sometimes we break below the opposite one and find support at the other. So by having both of them though, we can look and see, are they agreeing with us? Therefore, they're both validating what we're looking at. Are they disagreeing? Therefore, they have 50-50. So, it could go either way. Or, opposite. Is one saying this and the other saying that? Is the first one saying the opposite and the second one saying this? And Bitcoin is a perfect example of that right now. I'm going to switch over real quick. This is the Bitcoin futures chart. And we can see here that the 200 exponential moving average was on top and now it is on bottom. And then the 200 simple moving average was on bottom and now it is on top. Now I want to switch over to the spot market and we're going to see that difference in full action. So now here's the daily on the spot market and we can see that the 200 exponential crossed above, but then the 200 simple went above here and now the 200 exponential is back above again. So here we see the 200 exponential on top and the 200 simple on the bottom. And then on the Bitcoin futures chart, we see the 200 simple is still on top and the 200 exponential is still on the bottom. So what we saw happen was a bunch of price action that took place over the weekend while the spot market was closed, while the futures market was closed, affected those moving averages and essentially made it so those numbers don't line up. Therefore, the exponential and simple moving averages don't line up in the same way. So if one was looking at only the Bitcoin futures chart or only the Bitcoin spot chart, only the 200 exponential moving average or only the 200 simple moving average, they might get a different picture. And I guarantee you right now, there's a large portion of people that are only looking at futures or only looking at spot. They're only looking at 200 exponential. They're only looking at 200 simple. So by looking at both those charts, by looking at both those moving averages on both those charts, we now have 4 times the advantage of a typical person who's looking at one of those. Because essentially when you have multiple variables, you can take those 2 variables, which is Bitcoin spot and Bitcoin futures, and then you can take the other 2 variables, which is the 200 exponential or 200 simple, and you multiply them together to get like the total number of variables you have. So if there's 2 different charts with 2 variables on each chart, we now have 4 potential possibilities for what you could see. And in this case, all 4 of those possibilities are showing you something different. So by looking at these 4 possibilities, we now have arguably 4 times the advantage over someone that's just looking at futures or just looking at spot, just looking at, 200, just looking at 200 simple, etc. So now that you have the basic laydown of what's going on and why it's so important for the 200 exponential and simple, let's determine what does that actually tell us. And then we're going to talk about the other moving averages as well. So the way this is coded right now on this chart, the 200 exponential and the 200 simple are obviously both coded on here. But more importantly, what they're telling us is, and I'm going to turn off the actual price action for just a second so we can just see the actual lines themselves. What they're telling us is when the slope is to the upside, when they have a positive slope, they are both blue. The bright blue is the 200 exponential, the dark blue is the 200 simple. When the slope is flat or negative, they switch to red. So the 200 exponential switches to like this red right here. The 200 simple switches to like this pink or purpley kind of red, whatever you want to call it, depending on what your colors look like compared to mine. So the idea being that once the slope changes on these, they change colors. So you can just flip at any asset at any time immediately and tell, is the slope positive or is the slope negative? Now, not everybody does this. A lot of people don't even use moving averages because they're lagging, indicators. That's fine. This is how I use it, and why it works so good is because what this tells me is not, some people use price action in relation to the moving average to determine if we're in a bull or bear market, to determine if we're bullish or bearish. I don't like that, because the reason we're using the 200 exponential and simple moving averages is because they give us so much data jammed into this. So when we're looking at the daily, we're looking at 200 days worth of data. We're not looking at minutes or hours or a day or a week or a month. We're looking at, the better part of a year worth of data, all summarized up instantly just by that little line. So if we look at the price action underneath the 200 exponential or underneath the 200 simple, and we say, oh, we broke support, so now we're in a bear market, or we broke through resistance, now we're in a bull market, that doesn't give us an accurate picture of what's going on. When we look at the slope of those moving averages, that gives us a much more accurate picture. And here's a perfect example of that. The 200 exponential moving average actually flipped over red here when Bitcoin was selling off, but then it recouped from that level. And we notice here that never did the 200 simple flip over red. It stayed positive this whole time until recently. So what does that tell us? It tells us that if we were only using the 200 exponential, we might have gotten the wrong picture right here. It tells us also that if we were just using price action below the 200 exponential, we would have said right here, oh, we're in a bear market now because we're closing below it. Oh, we're definitely in a bear market now. We're definitely in a bear market now. And then look, we reclaim those levels, and then we start to put in higher lows and continue to the upside. So it's like, well, are we in a bear market? Well, I was wrong. Or you could do what Wall Street does and say, if something sells off 20%, we're in a bear market. Well, sure, Bitcoin drops 20%, dozens of times per year. Altcoins even more so. So how is that useful in crypto market? It's not. I mean, it's great, sure. Say we're in a bear market every time we go down 20%, and we've had, 93 bear markets in the last 10 years. That's fine. That's useless to me. But this, what we're looking at, this only happens rarely. And when it does, it tells us something is changing in the market. So let's zoom back now, and we're just going to look at this futures chart, and we're going to look at how the TJD master is telling us and what it's telling us. So let's keep in mind the futures chart actually is not that old, so we don't get a lot of data from it. It started in December of 2017, and that was literally right when Bitcoin basically was going into a bear market. So we'll notice there's a lag of literally 200 days from when these moving averages are populated. So this is when this chart started, and then 200 days later, the moving averages populate because they have to have 200 data points before they start to plot on the chart. So if we look at when they were plotted, you'll see obviously that they were exactly in the same spot. They start in the same spot, but then we'll notice that the pink one, the 200 simple, the pink one, the 200 simple, continues down and takes longer to respond, to roll back to the upside, as where the 200 exponential, rolls back to the upside much quicker. So again, by using both those, we get a more accurate picture of what's taking place. But we'll notice that as long as those were red, we were very clearly in a downtrend now. We can look at that and tell easily. But when this when this flips over, and again, I'm going to turn off the price action for just a minute, just so we can get like the clear picture. You don't even need to know where the price is at. All we need to look at is when these flip. When that 200 exponential flips blue right here, it flips red one more time, and then it goes blue, and then we go, basically parabolic after that. The 200 simple flips, and then what happens after that? I mean, price action literally goes up, just from the moving average to moving average, 55%. So we're able to easily capture a 55% move. Arguably, you could have got in from between 5,000 and 10,000, 100% move, etc. All that's beside the fact. So then we'll see again here, we have this little crazy period where, we basically start selling off and the 200 exponential flips back over red, warning us that there's potential that we're about to see some damage. And then we see here the 200 simple flips over as well. And that tells us once the 200 simple flips over red here, once the 200 exponential flips over red here, it tells us we're now officially in a bear market based on how I determine a bear market. Not once price action is below those moving averages. The bull market doesn't start once price action is above those moving averages. The bull market starts once the moving averages have flipped to a positive slope and flipped blue. The bear market starts once those moving averages have flipped red. So now if we look at what does that tell us based on the actual price action, well, what happened here? We flipped right here at 5,300, and then we literally went up to 14,000 right afterwards. So that was a perfect signal, perfect signal. I mean, you couldn't ask for a better signal than that. Sure, maybe you could have got in lower, maybe you could have got out sooner, whatever you want to say. But the fact of the matter is, Bitcoin moved up 155% after that. Now let's look what happened right here. This is when I was calling for a massive drop. This was right before the Rona hit, before anyone even knew about Rona. This candle right here, this breakdown was in March of 2020. And nobody was expecting a capitulation. No one was expecting this like massive sell-off and the markets to just absolutely crash. But look what the moving averages were telling us. They were literally telling us ahead of time. We already had flipped, broke down below the 200 simple, and then it acted as resistance right here. And then the futures chart gapped down below it. And we now had a red slope, red and pink, on both the 200 exponential and simple moving average. We then proceeded, assuming you didn't look at anything but that, and we just went by this candle right here. We literally had a 48% sell-off almost instantly after that took place, within days. You know, this was over a 7-day period, 6-day period. We had 50% drop in Bitcoin. And then what happened back here? We flip it back over to the upside. We're back on top of 200 exponential, but the 200 simple takes longer to respond. And then right here, we finally flip the 200 exponential and simple back over again. And again, that's at 93.40. And then what took place after that? A massive bull run. 93.40. So if we went, when these flipped over blue right here, and we just captured this move here, that was a 595% move. If we got in at that area, and if we got out, you know, let's say once we broke that down below here, etc., that was still a 291% move. So that's determining very clear and powerful trends to the up and downside. Now, we can't technically measure this one because we don't know exactly when these moving averages flipped, but it probably was somewhere around this area if we could look back further, and we can tell on the spot chart. But that was a 75% move to the downside. That was 58% move if you got back in once it flipped back into a bull market. So this is telling us very simple and very easily how to do something based on no biases, based on literally just math and trend. And it works, obviously, very well. We'll look at something with more time frame like Bitcoin spot chart and get a better idea. But that's the most simple version of the explanation of this and why the TJD Master works so well. And now what we're paying attention to right now is futures obviously just opened back up. But we're seeing now the 200 simple has flipped over pink for the first time. It has flipped over, you know, to our red measurement. And it now has a negative slope for the first time. Now the 200 exponential is going back and forth, and we did have this little symbol right here where the 200 exponential flipped, but the 200 simple never flipped. So again, if you were just watching one, you could have got the wrong idea. But here we see we are now in danger zone of the 200 simple flipping for the first time. And technically up until like this candle just opened now, this was red as well. So we were looking like we were getting ready to go into that same bear market. And the last time that happened, remember, was a 50% move. The time before that was a 75% move to the downside. So now that we have the breakdown on that, let's switch over again to our spot chart, and we'll pay attention to what this is telling us as well. So now here again, we can see, we'll look at the most recent price action first. The 200 exponential flipped over right here. The 200 simple rolled over right here. Technically, this would have been a bear market if we were just looking at the spot chart because we had negative slope on both at the same time. And then again here, we had a moment where it tried to, you know, basically flip back over, but we were able to save it. And now here the 200 exponential has rolled over again. We're below the 200 simple, but it technically has a positive slope. So we're sort of getting mixed signals right now, but this chart has given us mixed signals a couple times in the past. It told us we were technically in a bull market here. It told us we were bear market here. It told us we were technically in a bear market here. And it's telling us now we're technically still not in a bear market. So this one has given us some mixed signals, but the futures chart has not. The futures chart has been 100% accurate. Now let's look at those same time frames. Now here, this is when the futures chart started, but obviously we weren't able to populate the moving averages until much later because, you know, we had to wait basically a 200-day period. So if we look at that 200-day period from when futures started, which was the absolute top of this bull market, that was right here. So this would have been when they started, the futures 200 simple and exponential moving averages. But we see already we had clear indication from the Bitcoin spot chart that the bear market had already started right here actually. The bear market had flipped over right here because we now had both red slopes on the 200 exponential and simple moving average here. And from that point, you know, obviously depending what you're looking at, but once those flipped over, we then had a 59% move to the downside. So 60% move. Now, obviously, you know, obviously we would have been much better off, selling the absolute top, etc. But if we go from the absolute top to the bottom, we'll see that it was actually an 84%, 85% sell-off. And then again, if we look at where these flip back over bullish, we got back above the 200 exponential and simple here, and then that was when we actually flipped over the 200 exponential and simple to the upside. And once that took place, again, if we just look from once they flipped over bullish, we see the initial move was over 140%. Assuming you just took profits here, that was over 50%. And then again, we see the same thing happening on the spot market, but even better reaction because it was closed when we got that gap down. Right here, we flipped the 200 exponential and simple over negative. So we'll go from the next candle to the sell-off. And we see here we have an over 51% move to the downside. So once again, the TJD Master got us out of that price action perfectly to make sure we didn't take that 50% haircut. But now here we notice that we had gotten a false signal before that, or a warning sign before that, as the 200 simple rolled over, 200 exponential rolled over. So again, it saved us from some negative downside, but much less useful. So 12%. So again, we see what amounts to like a false signal or early signal or whatever from the spot market that we didn't see on the futures market. So we know that the spot market is more likely to give us a false signal or less likely to be correct or more likely to be incorrect, however we want to look at it. But here again, we flip over 200 exponential and simple to the upside, and not cherry picking. I'm not going by, the best entry ever. I'm going by the actual close once it flips over. And then again, we had an over 650% move to the upside once that took place. And then again, if we were going to go to where this flipped back technically into a bear market, it would have been something closer to like, can look at it one more time. It would have been something closer to, basically if we exited right here, it would have been 338%. So we know that this strategy, determining if we're in a bull or bear market, and then entering or exiting based on that, and then trend trading or trading with the trend, because we know if we're in a bull trend, price is more likely to go up. If we're in a bear trend, price is more likely to go down. We know that that's giving us exponential returns because the biggest drawdown we saw was between 50, 75 to 85% to the downside. But the upside potential was 50%, 350%, 600%. So we know that this gives us exponential reward for the amount of risk that we can take, because the price action can only ever go down 100%, but it can go up infinite amounts of percentages. But even if we just say 1,000 to 100, that's 10 to 1 upside, or 500 to 100, it either goes to 0 or it 5x's, etc. That gives us, basically asymmetric returns, which is what we're looking for. And this tells us, do we want to be long or short in that market? So what we're seeing right here is we're at a potential turning point. Price action is underneath the 200 simple. The 200 exponential is already rolled over, and we're well underneath that as well. So literally, if nothing happens and we just go sideways here for 1 or 2 or 3 days, we will get this signal and we will be confirmed in a bear market based on how I determine trend. So that's the TJD Master 200 exponential and simple explained, and the trend, and then also in relation to the futures chart and the spot market chart. So I'm just going to break down the other two moving averages on here and how they're determined, how I use them, and why they're so important as well. And then we're going to move on to like just some regular TA. So here we have the next two portions of this are the 8 and 21 moving averages. So again, I'm going to turn this off here. And the reason I don't just make up stuff. I'm not like, oh, this is the Bravo 9 that I made up. No, I'm using actual moving averages for a reason. I don't use made up numbers. I'm using the 8 and the 21 because those are Fibonacci numbers. If you're not familiar with Fibonacci sequence, I highly recommend you check it out. It's absolutely phenomenal. It's amazing. But essentially what the Fibonacci sequence is you start with 1 and then you take the number before it, which in this case it would be just 1 because we're starting with 1, and then you add them together. So we have 1 is the first Fibonacci number. The second Fibonacci number is 2. Because you take 1 and 1, that gives you 2. And then the third Fibonacci number, you take 2 and you look at the last number, and that was 1, so now you have 3. So then for the next Fibonacci number, you take 3 and you take the previous Fibonacci number, and that's 2. And you just go through, and that gives you 5 next. And then the previous number before 5 was 3, so that gives you 8. So that's our first moving average that we're using is the 8. And then you take the next number and you take the 8 and the 5, add those together, you get 13. And then you take the 13 and the 8, you add those together and you get 21. So now we have the 8 and the 21 are two of those key Fibonacci numbers. And the sequence goes on and on and on and exponentially because it takes your current number and your previous number, adds them together, and it gives you your next number, and then just keeps going on like that forever. And if you're not familiar with Fibonacci, highly recommend you look into it. You know, it's Fibonacci retracements, Fibonacci extensions, Fibonacci numbers for moving averages, you know, for time frames, etc. But anyway, that's a whole nother video. That's why I use the 8 and 21. And now we'll notice something different here, though, with the 8 and 21 and the way I wrote this code. This is not using the slope the same way the 200 exponential and the 200 simple are. So once the slope has peaked, we see this is a peak, and then it rolls over and it flips red. That's not what's taking place right here, because clearly we can see here there's a peak on both these moving averages, and they flip to a negative slope, but they don't change color. Why don't they change color? Well, because this code is written differently. We notice that once the 8 crosses below the 21, they flip over red and pink respectively. And then when they cross back up, they flip back green. And when they cross back down, they flip back down. So this is our shorter term, or like scalp, or, you know, swing trade, whatever you want to call it, inside of those 200 exponential moving averages. So what does that tell us? The 200 exponential and simple moving average tell us the trend. So what does trading with the trend tell us? It tells us we have a higher probability of success. So if every trade is a coin flip, the price either goes up or down, and time is not a factor. You're either right or wrong. You bet it goes up or you bet it goes down. How can you get an edge on that? By trading with the trend. If we have been going up, the trend is up, so we're more likely to continue going up. And that's just a fact. The trend is down, and you take a short, you're more likely to succeed because the trend has been going down and it's more likely to continue going down. And that's where the old adage goes, trade with the trend. So by using the 200 exponential and simple on the 1 day or 4 hour or weekly or whatever time frame you're using it on, we then look at the 8 and 21 to determine when to enter and exit a trade within that trend. So we know that we're in an uptrend here because the 200 exponential and simple are blue. So that tells us we're in an uptrend. So what are we looking for? We're looking to enter on green crosses. And we're looking to exit on the pink or red crosses. Or maybe we don't want to exit at all. Maybe we just want to accumulate more at the green crosses. So we'll just start back here after like the CVD dump. So we'll notice here that we were technically still in a bear market here. So we're not looking to buy. We're actually looking to sell red crosses. But obviously we already did that because that was our dump down to like 3,800. So we're not looking to enter right here because we're technically still in a bear market. So once we're on top of these and the trend is green, so we now have all blue and all green, then we're looking for an entry. So we're looking for a retest of the 200 exponential and simple, or a reversion to the mean, or we just start to slowly accumulate. So once we're accumulating in through here, we're in the trade, and then obviously we see the cross to the downside, so we potentially want to exit and then re-enter when it flips over green again. We don't want to short right here though, because the trend is bullish. The trend is up. So we're looking to take longs when the trend flips over green again. So again, we enter the trade right here at 92.35. And then here we want to take profits on the trade because we see the 821 cross. But obviously this candle doesn't allow us to get out in time. We have to wait until the cross takes place, which happens after this candle. So again, just assuming that we took a scalp trade right here, you know, and then got out at the close of that daily candle, that was a 24% move. So we made 24% to the upside. And then obviously the dump down after that close was, you know, from peak to trough, another 14% to the downside. And then again, we had a false signal right here, 821, but we're looking to long that. It comes back down, puts in a higher low, and then again, goes sideways for a bit. And then here we have a cross again. So once again, we're looking to long this cross because we're clearly in a bull market. Obviously everything is blue. And then from that cross to the top, we have another 85% move. And then once again, we see that it comes back down and retests, but never flips over red. So we're actually never going to exit that trade. We're going to stay inside of it from here until actually here it ends up exiting at 33,000. So that was 219% move to the upside. And that's your scalp trade or whatever along the way. And then again, we see this actually goes down, and then we're looking to buy the 821 cross again. So we actually get in around the same price. No big deal. We avoid the risk. We get a slightly worse entry price than if we just sat in there. So we take less risk and we get all the reward. And then after that, price action goes up again. another, 90%. If we go until the next cross and then we got out at that, we would get out at this red close right here. And then we would look to re-enter potentially right here. And then again, we see a false signal and then, the cross back down. Now that's just using this. Like obviously we had called out head and shoulders patterns. We had called out triple bearish divergence. We had called out specific other reasons why I use this actually as an exit point. So I got out at 60, I believe it was 63,000. And then again at like 59,000 right here. And then actually avoided this dump based on triple bearish divergence. And then we got back into this trade based on triple bullish divergence, actually right around, I believe it was around 31,000 based off the 4 hour. But assuming that we were just waiting for this, we knew this hadn't actually flipped over red yet. So we were still looking to buy the dips. So again, here we were still looking to buy at the 821 cross. So, which we did. And it's all in the trade group, fully documented. I don't hide my stuff. I don't delete things when I'm wrong or, go back and change things. We had a 60% move back to the upside right here. We took some profits along the way. But again, very profitable trade. Came back down, found support right here. We actually took another long off of these positions here and then rode it to the top. And then again, we were out back here at about 63,000 and have been out of our long position since, with the exception of some quick little scalp trades. So as of now, though, technically, based on the spot chart right here, based on the TJD master indicator, technically, we're still looking to potentially long this dip right here. But at any point in time, that could change because this 200 exponential has already flipped over red. The 200 simple is dangerously close to flipping over red. So right now is dangerous. The same way this was danger zone right here, but we saved the trend and moved back to the upside. This is danger zone right here, and we need to save the trend and move back to the upside, which is still fully a possibility. But again, now that we've broken that down completely, let's switch back to the Bitcoin futures chart and look at what's going on. This one never gave us that false signal. It did not give us the false signal right here before the Rona dump. It did give us the perfect signal right here before the Rona dump. It did not give us a false signal to the upside. It did not give us a false signal right here with that Bitcoin dump. The triple bullish divergence, it didn't give us a false signal. So we enter that fully confident that we're going back to the upside. And then again here, we had the perfect sell-off right here to get out of this position. But now we have to wait and see, is this going to give us our first false signal ever? Or is it going to continue telling us the truth? I think it's going to continue telling us the truth because it's been right every other time without a false signal. Why would it false signal us now? Could it false signal us? Of course. But I think it's very unlikely. And I trust this chart. And tomorrow we'll know because again, we have red, and then we tried to rally back up. We closed this gap basically on the Bitcoin chart, attempted to rally over the weekend, couldn't do it. And now here we are below the 200 exponential and simple. So we are technically right now, based on this previous candle close on Friday, in a bear market. We're very close to being able to save the trend by just closing back above it because the moving averages are essentially flat right now. But the longer we spend underneath them, the faster this will accelerate to the downside and the stronger the bear market will become. And I'm going to tell you right now that everybody wanted institutional investors. The institutional investors are here now. They have showed up. And you know what the problem is with institutional investors? They don't believe in shit. They don't care about Bitcoin. They don't care about crypto. They don't care about decentralized. They don't care about the future. They don't care about the blockchain. They care about one thing and one thing only: money. They care about money. Unlike cryptocurrencies, they are businesses. They have to actually make profits. They have to do good by their shareholders, or if they're private equity firms or investment firms or family office, whatever it is, they have to try to make money and beat the markets. So they don't care what they're buying or what they're selling. They're trying to make money, percentages. They have to do their job good so that people will give them more money because they make a spread on that money. The more money you give them, the higher percentage they get to take, the higher their cut is based on that percentage that they get to take. So if they can build confidence and do well, they make more money. They do not make money off your money if it does good or bad necessarily. I mean, a lot of times you do see like, a 210 or something like that, or whatever the situation is, basically like a set percentage for just managing your money for you. And then a larger percentage if they outperform the market or, a certain goal, etc. So like, if they perform poorly, they still get 2% no matter what. Kathy Wood gets that 2% no matter what, no matter how bad she does, how much money she loses of yours, she gets 2% regardless. And then on top of that, if you outperform the market or outperform whatever predetermined goal you have, let's say, you're going up against the S&P or the Dow Jones, which did like 28% this year, if you did over 28% on that managed money account, you would make 10%. And there's different ways it can be determined. It's not always 210. There's lots of other, it might be better than that. It might be worse than that. It might be actively managed, might be passively managed, whatever. There's tons of differences. But they have an incentive to beat the market, not necessarily an incentive to just say, I love Bitcoin and I'm long it forever. No, they don't give a damn. They give a damn about that fiscal period, that 1 year period, and beating the market so they can make a higher spread. And they care about outperforming the market because the more confidence they get means the more money they get, which means the higher percentage they get, like same percentage, but off of a larger dollar amount. And then if they beat the market, they got more money now because they're doing well, and they get a higher percentage because they beat the market. So they double do well. So again, we have 4 factors. You either lose and get a set factor and it's not as much, and then people lose confidence, so they take money out. You have outflows from your fund, so you make even less money, and it's a death spiral. Or you beat the market and more money comes in because you're crushing it and you become popular, or people just want to flood their money to you because you're doing so well. So you go exponentially to the upside. So that's why it's so important. And those same people, that smart money, those institutional investors, those market makers, whatever you want to call it, they don't care about Bitcoin. They don't care about Ripple. They don't care about Ethereum. They don't care about the Dow Jones. They don't care about Tesla. They don't care about anything. They don't care about the future. They don't care about your argument here, there, and the other. They care about money. They care about money, and that's it. And that's their job. Their job is to care about money, not fall in love with an asset. Because you can say, I'm a hodler. I'll never sell my Bitcoin because I believe in the future. They will never say that. They might say, I'm going to keep a small percentage of it regardless because it's a hedge, or, it's not an correlated asset, or, it's SMUC insurance, or what. They can have a lot of arguments, but their argument can't be, I believe in this, so I'm going to hold it, because that's not how you make money. And their job is to make money. And if they are doing that, they're dumbass, and you don't want your money with them anyway. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. But regardless, that's the breakdown of the TJD Master, how I use it, why it's so important. And this is literally the basis for me determining trend. And determining trend is one of the most important parts of my personal strategy, because if I'm trading with the trend, I'm no longer flipping a coin. Because anyone can literally step up with no intelligence whatsoever and can coin toss and win. They can win a bunch of times in a row. You could flip a coin with a random person and they could beat you 10 times in a row. They call heads 10 times in a row and they're right every time. Maybe they call heads and tails alternatively every time and they're right 10 times in a row. But I promise you this, they have no advantage based on the previous flip. They have no advantage based on what they think's going to happen or anything. It's completely random. But they could still beat you 10 times in a row, or they could lose 10 times in a row. But when we start getting that advantage by using moving averages and momentum in our favor, that's when we gain the advantage on the market. So now, instead of taking a long or a short, by using the moving average and the trend, that gives us an advantage. So now, instead of a 50-50 coin toss where just anybody can win, we're using those moving averages and the slope on the 200 exponential and simple, specifically on the daily in this case, but whatever time frame you're looking at, we're using those to determine trend. So now maybe we have a 60-40. Maybe we have a 60% chance of success and a 40% chance of failure if we trade with the trend. So if the trend is telling us blue, saying go, bullish, we have 60% chance of success. So our trades are more likely to play out. If the trend is red and we're trading shorts or selling our assets, again, maybe we have 60% now instead of 50-50. So we have an advantage again to the downside. Without taking into account like risk reward ratio, that's literally just taking into account probability of success. So by using trend, by using moving averages and trading accordingly with the trend, we increase our probability of success. So that slight edge on the market, that alone gives us an edge and makes us more successful than if we weren't using it at all. So that's our starting point, our beginning principle for everything we do in these markets is trading with the trend. And that is why this indicator alone is so important, because it takes all that and it takes everything that I just took all this time explaining and everything that I have taken years and years and years to figure out on my own and all this stuff and figure out what's best, the crosses, the slopes, the 200 exponential, the 200 simple, all this stuff. And it makes it so just anyone can pick it up, spend a couple minutes studying it, learn how it works, and then immediately start using it successfully. So we have one component, and it's already made us better. It's already increased our probability of success. And the best part about it is the way it's color coded and the way it just screams to you bullish or bearish. We can flip between 200 assets every morning when we wake up, or every night before we go to bed, or midday, or whatever. And we can just flip it on. We don't even have to look at the price action. We don't have anything subjective. We're not deciding, do we think this is bullish or bearish? We don't have to look at news articles. We don't have to think, oh man, I don't know, Elon Musk said this, and I know there's some Tesla's strong, but the solar hasn't been doing this. Take all that bullshit out, and we can just look at the moving averages and the slope of those moving averages, and it tells us, do I want to be long this asset? Do I want to be short this asset? Do I want to just wait and see because we're at an inflection point? Like right now, maybe we're at an inflection point. You don't want to be long. You don't want to be short. You just want to sit on the sidelines and wait. I'll wait to see what happens. It looks like there could be some turmoil in the market. Either we're about to go to the upside or about to go to the downside, but right now, I'm not sure. But it looks like things could change to the downside. We could save this price action and go up. But right now is the last place I want to be, is in these markets, or at least high risk, as opposed to a situation like this where we have the 8 and 21 cross to the upside, the 200 exponential and simple cross to the upside. It looks like we're getting ready to start a bull market. That's risk on for me, baby. And even though we got out temporarily right here based on this head and shoulders pattern, shout out to the group members on that. Even though we got out right here, we got back in. Based on this, we were expecting actually a retest of the 200 exponential and simple. So we didn't even get the price action sell-off we wanted, but that's even more bullish. So again, that just put us in an even better spot to capitalize on this bull market. So again, without being too redundant, that's why the 200 exponential and simple are so important. That's why the 8 and 21 crosses are so important. And that's why using these things together are so important. And, sure, anybody could take the time. They could learn how to code. They could learn how to write Pine script. They could not have the color coded changes. They could not have this strategy or whatever. They could just use these same moving averages and just look at them and determine it. But it saves you a ton of time and effort. And not to mention, I'm giving away my strategy for free. So even if you don't want to pay me and buy this indicator, or you don't want to join the trade group or whatever, the benefit of this video is still yours. The benefit of this strategy is still yours. That's yours for free forever. What I've just told you is the basis of my trading strategy, which is success. And I'm not the only one that uses this, but I'm the only one who combines these things together specifically and can explain them in this way and why I use them. And, obviously I'm making this video on it right now. So that's yours. You can keep that. You can have that forever. But what I do ask is that if you want to participate in this specific indicator, the TJD Master, make a contribution or join the group or whatever the situation is and support my work. Because I'm going to tell you right now, this is one component. I give away all the rest of the indicators for free. Everything else I use is for free right now, except for this one, the most recent one I did. The strategy I even give away for free. But if you think this is all I got, you don't know shit. Okay. And you can ask anyone, the group members, everybody. I do all these videos for free to help and to give knowledge and to help teach people. But the real wealth of knowledge is inside my head. And I'm just trying to share it with you people. So that's the TJD Master. If you want access to this indicator, please reach out to me. Send me an email and, you can join the trade group. I'm switching up the way it works with the New Year's. So basically it's going to be a permanent entry to the group. You get permanent access to the TJD Master. You get permanent access to the group, and it's a one-time fee. As where previously, you pay to join the group, and then there was a monthly fee to join. Everyone that's already in the group will be grandfathered in. Everyone that's new to the group will actually, just have to pay the new price to get in. Until the end of the year, until January 1st, the same structure is still in place. But after that, I'm not going to lie, the entry price goes up to join the group and get the indicator, but then it's not monthly anymore. So technically, in my opinion, I think that's better and more likely to benefit people. I don't want to just regularly have to text people to be participating or whatever. I don't want people to feel obligated because sometimes you don't have the option to trade. Sometimes you're too busy with life. I understand some people are struggling with money. We're probably about to be going into a bear market, potentially on stocks and cryptos right now. So, I would rather just have people get in, start learning now. That's the best time to learn. Get involved, and then we can all be positioned for the next bull market in whatever comes. So that is the TJD Master. That is the breakdown. Obviously, if you don't want to, that's fine. You're obviously watching this video probably for a reason. I also have other indicators that are free, a bunch of different ones that work phenomenally, and they all work together. We have the TJD Jewel Thief. We have the TJD TDMACD. Those are both available for free on TradingView. You can use them as well. You can use I have other moving average indicators that are available for free. There's a bunch of other stuff. But again, don't think about it so much as paying for a service or whatever. Think about it as supporting me. Think about it as paying for your own education, supporting yourself. Think about it as, doing yourself a favor and actually spending money on something useful, your education, because no one can ever take that away from you. And that's the most valuable thing you can ever have. You could lose everything. You could lose everything. But as long as you're still alive, as long as your brain is still functioning, all the stuff you've ever learned is still up there somewhere. You just got to dig it out sometimes. And that's why it's so important to learn how to do this stuff, not just watch videos from somebody on YouTube or Twitter or whatever and take buy and sell signals or whatever. It's much more important, because what happens if I'm gone? What happens if I stop making videos? I get tired of YouTube. What if my channel gets banned? I don't have other social media. I'm not going to, maybe I don't want to do this again because I'm tired of YouTube and their BS. So that's it. I'm gone forever. And now that's it. This asset of yours is gone. You never get access to me again. You don't get my new indicators. You don't get my new knowledge. You never got the TJD Master. So much better if you have this yourself in your own head and you can use it without me. It's great to use both. It's great to have all my free indicators plus the master plus me. That's the best case scenario. All of it, everything. I'll take one of everything, please. But that's not always going to be an option. And I mean, I'm not going anywhere, not intentionally or on purpose or whatever, but who knows what's going to happen in the future. So I would much rather teach each and every one of you to be successful on your own rather than rely on me for your success. But in the meantime, I'll be your crutch. You know what I'm saying? I'll hold you up. I'll help you out. We'll get through this together. And, obviously anybody that's been watching the channel for some time knows I have put out countless phenomenal trade setups that have performed absolutely amazingly and made hundreds and hundreds of % of gains for anybody that's watched my videos. And not to mention the thousands and thousands of people that have gotten my indicators for free. And that's fine. I'm totally cool with that, or I wouldn't publish them. So that's it for the TJD Master, the full-on breakdown. I appreciate you taking the time to look out. If you have any questions, comments, please leave them down below. Yeah, we're just going to continue on with some TA. But before we go today, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. All right, so obviously I'm going to snippet that part out. I've been meaning to make a breakdown video for the TJD Master for anybody that's watching live. And I just figured why not do it at the beginning of the stream, as it's so relevant right now because we're potentially getting ready to flip into, a bear market, or threatening at least a bear market for the first time on the futures chart. But potentially a false signal, maybe, maybe not. We'll have to wait and see. So I'm going to jump in the comments real quick and talk to you guys. What's going on, David Morrell? Hello to you, my friend. Good to see you back. Crypto Galt, good to see you. Hey, guys. Hey. What's up, brother? Spike Keystone says, this is awesome info. Thank you, Spike. I'm glad you're enjoying it. CW says, thank you, broski, for sharing tonight. Of course, CW. Appreciate you as well, my friend. Demetrius K says, hey, everyone. Hello to you, Demetrius. Thank you, my friend. So, yeah, that's it for our little preview start to the video. That's where I was basically coming out. CW says, if investing was easy, it would be name your mom. Oh God. Yeah, right. Yeah, so that's basically like the intro. So obviously if you saw the title of the video today, I'm not trying to be like overly bearish or whatever, but my point is everybody was waiting for, institutional money and Wall Street and mainstream adoption and everything, and now crypto is going to go to the moon. And title of the video is how and why they are about to kill Bitcoin. They're not going to kill it. It's not going to go away. It's not going to be dead, but it might be about to go into a bear market. And when I say they, I'm talking about market makers. I'm talking about institutional money. I'm talking about smart investors. I'm not talking about the crypto cult. The crypto cult will always love Bitcoin. It will ride it down to zero. The same way they rode Cardano down to 3 cents. The same day they rode Bitcoin from 20,000 down to 3,000. The same way they rode XRP down to, a couple pennies. They'll ride BitConnect. There's people that bought into BitConnect and never sold because they still believed in it. They thought it was FUD. I mean, it's gone. It's gone now. It's delisted. It went away. There's people still in cults that don't even exist anymore because they're just sure. They're sure eventually one day the aliens are going to come and save us. They're going to take us away. I'm sure of it. Even though the cult is dissolved now. One day the XRP is going to go higher once they stop fudding us. One day. None of that matters. You can be in cult if you want. Be in a good cult, though. Be in something good. Be in the, I'm going to save, like, poor children in other countries that are less fortunate cult. Be in the, I'm going to help get strays adopted cult. Be in a good cult. Don't be in some bum cult that's going to lose you money and break your heart. So anyway, that's our Bitcoin chart. That's our TA. Let's look at it while we're here on the daily. Let's look at those with what's going on as well. Obviously, we went into the moving average deep dive and everything on the TJD Master. Let's look at what's going on with our other ones as well. So we obviously have on the TJD TDMACD, red slope line still well below the zero line. We did see 2 green histograms telling us there was potential for us to find support right here, but we did get rejected off the 200 exponential, 200 simple rather. Got another red histogram, and now here we're just now showing signs of a green one. So we're far from getting interested in this again, because you guys know the first sign of potential for this is 2 green histograms. The second sign is a cross over the zero line of those histograms. The third sign is the cross above the red slope line. And then the fourth and final sign is for the slope line to switch over blue. And sometimes those things happen in tandem, but we don't have any of those right now. We don't even have 2 green histograms yet. So there's nothing bullish about this indicator. It's actually in, the only thing that could be more bearish about this indicator right now is if we had a red histogram, which we did right up until about, 3 hours ago. So when the new one flipped. So again, anything could happen today. Let's talk tomorrow. If this one's green, we'll talk the next day. If that one's green, we can say at least now we have step 1 of 4 for this indicator bullish. But right now, it's got basically everything bearish. And then if we look at the TJD Jewel Thief, we'll see that the Jewel Thief is clearly in the bearish control zone, all green. It's been living inside the bearish control zone with the exception of 3 days. The 3 times when we exited it right here and we see no highlight color in the background, with the exception of those 3 days, the bears have been in complete control. The bears are literally holding the bulls down with their face in the dirt, and they're just having their way with the bulls. I mean, they're just bloodying them up, and it's not pretty, folks. It is not pretty. And it doesn't look good. It doesn't look like anything's going to change. Because if we look here, we got rejected. We tried to cross back up right here, got rejected, crossed back down to the downside, got rejected again, crossed back down to the downside. And now this tiny little uptick, that's what we're going to get excited about? No, thank you. I will wait until we exit the bullish control zone, which is at 20 right here, or bearish control zone, I'm sorry. And we get the hard buy signal off the cross when the blue crosses above the pink. Something like this, which obviously that ended up being a false signal. Which happens. We definitely get false signals. But we should have known right away because obviously we had a rejection candle. So we now have 1 indicator, 2 indicators, 3 indicators, and now we're looking at candlestick patterns as well, or not even a pattern. That's just a specific candlestick. So when we start factoring these things together and we start putting in bullish and bearish divergence and all this other fancy crap that we had on here, think about how exponentially good you get over time when you have these things definable, when you just do the same thing over and over. When I can look at each of these indicators, which has like 3 or 4 different factors, and then I can look at a candlestick or candlestick packed pattern. I can look at a gap fill. I can look at all this stuff together. And now I have like, roughly 12, 15, 20 different things that I'm factoring. So I can give this thing a score right now out of 20. Is it bullish or bearish? 0 being the most bearish, 20 being the most bullish. I mean, look at, if this one has 4 factors, basically, the 8 and 21 are crossed to the downside and we're below them. The 200 exponential has simple has a red slope. 200 exponential has a red slope. That's 4 negatives. So that's a 0 out of 4 on this one. We're in the bearish control zone. The blue is below the purple still. So, that's 0 out of 2 on this one. So now we have 0 out of 6. So we're as bearish as it gets. We're at 0. And then here we have 1 green histogram, but we need 2 green histograms for the first bullish signal. So that's bearish. We're below the red slope line. So that's bearish. We're below the 0 line. That's bearish. So again, we literally are at 0 out of like 10 factors just based on this. And then we start taking into account other things. It looks terrible right now. Crypto looks terrible. And it's not like this just happened overnight. We've been expecting this. I mean, as a matter of fact, we were talking about the Elliott wave, 5-wave structure, expanding flat, ABC correction. We have ABC to the downside, ABC to the upside. That forms our B, higher high than the previous high. Tricks everyone into think we're going higher. And then again, after that, we start to sell back off. And then we put in a 5-wave correction to the downside. 1, a 2 would be the bounce. We don't know where that bounce is going to be from yet. And then the 3, the 1 is the down, the 2 is the bounce, the 3 is the second drive down, the 4 is the bounce off of that, the retracement of the bearish 3, and then the 5 is our final sell-off correction. And we've talked in depth about this quite a bit previously. And we have other key Fibonacci levels that we pay attention to. Keep in mind, all that technical analysis we just did was without even drawing on the chart. That was without even drawing a single line on the chart or a pattern or anything like that. So when we start adding all this stuff up together, I mean, we are like next level. You don't even understand the amount of technical analysis beatdown that we can put on these markets. And that's why it's so important. We literally bend these markets over and take whatever we want from them. Well, sure, we're going to be wrong sometimes, but the more knowledge you have, the more tools you have in the belt, the more times you could say, man, this looks good. Wait a minute. What's that little guy right there? And that's exactly what you see here. You say, wait a minute. What's this little guy? What's that little rejection? Okay. What's this little bearish divergence? Hang on a minute. New higher high, but is this an expanding Elliott wave correction flat that requires us to take out the previous high? Is this a potential double top? Did we hit the 1.618 Fibonacci extension of the previous all-time high? Wait a minute here. Something's going on. Oh, wow. What are the chances? I mean, when you start adding all this stuff up together and taking our TA game to the next fucking level, I mean, look, let me put it this way. I'm not saying I'm the best trader out there. There's tons of people that made more money than me, trade better than me. Most of them are probably very old and very experienced and been doing this probably longer than me too. But I'm going to tell you right now, I've been doing this longer than most people in these markets, especially the crypto markets. And I'm definitely better than most people in these markets. And I don't have to tell you because I can show you over and over again by being correct. So the real question is, do you really want to be trading against all these people that are better than you? Or do you want to trade on the same team as me while I help you to learn this stuff? And then on top of that, while you're learning, you're becoming better. If every day you're 1% better, you're getting 1% better than the market. Eventually, once you reach that 50%, you're now actually more skilled than most participants in the market. And then once you get up in there in that 60, 70, 80, 90, that top 10%, that top 1%, think about that. If you're better than 99% of the other people doing something, and there's 100 people doing it, and you're better than 90, there's only one guy you got to worry about. The other 99 are sheep to the slaughter. Well, 98 if you count yourself. The other 98 are sheep to the slaughter. Sure, you're going to be wrong sometimes. Maybe they score a goal on you. Maybe they get a lucky punch off, whatever you're competing in. Maybe they get you on a trade. But the fact of the matter is, the skill is a factor. And becoming more skilled, practicing and getting better at this is exponentially more beautiful. I mean, you're going to do well just with some of these skills. But if you start putting them all together, you start using a trade journal, you start using the moving averages, the stochastics, the MACD, the Fibonacci extension and retracement levels, you start using candlestick patterns, you start using bearish and bullish divergence, you start putting all this shit together and baking it up into this pie, all of a sudden you got some next level shit that most people will never in their lifetime be able to fuck with you on. Pardon my French. So anyway, let's keep moving on here. So that's our Bitcoin futures chart. That's basically just a little breakdown of some of the different things that we're paying attention to, how we use these tools, how we use these skills to basically, do what we do. So now we have the Bitcoin spot market chart. Telling us much of the same. We see a little more bullishness on the spot market chart, multiple green histograms. So we have like a 1 out of 4 right here. And then again, we're seeing that same rejection. We're not inside the bearish control zone, but obviously price action is still trash. We don't have the 200 simple rolled back over to the downside, but we're still below the 8 and 21. They're across to the downside. We're below 200 exponential. It has negative slope. So we have a 1 here, we have a 1 here, and we have a 1 here. So we're, if we have 10 metrics, we have a 3 out of 10. So the spot market is slightly more bullish. I do want to flip back actually and look at one more thing. I want to look at the futures chart on the weekly and then the monthly as well. We're seeing something happen that we won't get false signals on nearly as much. And it's a big signal when we do. And that is the 8 and 21 getting ready to cross to the downside. So we see that happen once right here. And that was the CVD pre-dump. And then we see it happen again at the CVD dump. And then we see it happen again at the, basically like sell off the top right here. And then again, we see it's about to happen right now. So that's a big deal right now we're seeing happen. We're seeing also the sell buy sell was at the top right here, and then we left the bullish control zone. That was followed by that like 60% correction. We're seeing now we're leaving the bullish control zone, and we got the hard sell on the weekly here. So telling us potential for more downside. We see here 2 red histograms in a row. We cross below the slope line, and the slope line turns red. We're now below the 0 line. So that was obviously the 4 steps of bearishness. And then again, we reclaim those levels. We reclaim the 0 line. We reclaim the slope line, and then it flips over blue. So that's the most bullish. And then here at the top, and then again, we see double rejection candles. We see bearish divergence taking place. We see a peak here. We see a lower peak here. We see a peak here. We see a lower peak here. We see a peak here. We see a higher peak here. So now we have weekly bearish divergence followed by the sell-off into the 821 potential cross to the downside. We have multiple red histograms in a row. We've crossed below the slope line. The slope line has flipped over red, and we're about to cross below the 0 line. The hard sell signal, we left the bullish control zone, and the Stochs are angled to the downside. So again, based on all these metrics, once again, we're seeing like a 7 out of 10 bearish right now, or a 3 out of 10 bullish, however you want to look at it. So, and that's on our weekly chart, which means we're probably going to get a long, prolonged play on this. And then if we just switch over to the spot chart and we do the exact same thing, I'm going to take a quick break here in a second, get a drink. We see the same thing happen when the 821 crosses the downside. We go into a multi-month, like year-long bear trend, and we bounce the 200 simple perfectly. If you were looking at the 200 exponential right here, you got wrecked. If you were looking at 200 simple, you bought it perfectly off the bottom. If you were looking at 200 exponential right here, you got wrecked. If you bought the 200 simple, you bought the bottom. 821 cross to the upside right here, and then back to the downside. 821 cross to the upside, complete bull market. 821 cross to the downside, we resave it. 821 cross to the upside, another, what did we do? Like almost 50%, 60% off that move right here. Much more off the altcoins. And then again, we see the 821 about to cross the downside again. So do we want to de-risk right now, or do we want to hodl? Do we want to hope and pray, or do we want to use technical analysis? Because me personally, I'm using the TA, baby. Hard sell signal coming out of the bullish control zone, multiple red histograms, hard, cross down below the slope line. Slope line is flipped over red. We're still above the 0. So technically, we have not quite crossed this to the downside. We are still, and we can't really use the slope on the 200 exponential and simple to determine a bull or bear market, because we see that that's actually never happened. We've never had the 200 simple flip over negative. So if that does ever happen, if we were to get down below like 20,000, then we start looking at this as being a 5-wave Elliott wave structure, which was the 4 halving cycles, the 2013 top, the 2017 top, and then the 2021 potential top, and then that turning into an actual correction of the entire bull run and the first bear market on the weekly that Bitcoin or crypto has ever been into. Weekly, I'm saying here. So yeah, that's it for Bitcoin and basically our longer time frames. Definitely in the danger zone. This thing is, the plane is currently crashing. We do still have some fuel, but the fuel is on fire. One of the engines has exploded and is plummeted to the ground. We're in a death spiral. Still behind the controls though. We haven't ejected yet. Okay. But we got our hand on the button and we're thinking about it. And by our hand on the button, I mean, we're going full on into a bear market. We're right there. Okay. We're about to go full Maverick and Goose. Hopefully not Goose. Somebody's going to get goosed. Somebody's going to be the goose, but it's not going to be us. We're going to be Maverick. We're going to be out that bitch. We're going to be the star. Okay. We're going to get the hot girl at the end and all the monies. But Goose, the hodlers, they'll be dead. Financially. Hopefully not literally. But I think that's a good place to take a quick break. I'm going to grab a quick drink and we'll jump right back into it with some altcoin technical analysis as well. And then we'll get into all the other good juicy stuff. So, and of course I'll interact with chat when I get back. So give me like 2 minutes. I just got to grab a drink. All right, should be coming back through loud and clear. So Crypto Galt says, amazing value. Anyone that's looking at this fresh, genuinely hands-on tools are worth price alone, to be honest. Hey, thanks, my brother. I appreciate that, man. And then he said it again, ... genuinely. No, I know. I really appreciate you, brother. And also, does it work equally effectively at lower time frames for scalping? What's the lowest time frame you would go with? Yes, it does work equally effective on lower time frames. The most important thing to pay attention to, in my opinion, or actually just like the truth be told, is you have to pay attention to if you're looking at a lower time frame. Like I typically use the 4 hour and the daily to trade off of, but I look at the weekly also, and then on my other monitor, I keep a 15-minute chart, the 1 hour chart, the 4 hour chart, and the daily chart at all times for Bitcoin. So I have those. I have 15-minute time frame all the time up. That's the lowest time frame I look at. I'm not looking at like 1-minute charts or 5-minute charts or anything like that. You could, because of the volatility in crypto, and probably do okay off of it. But to tell you the truth, in my opinion, it's just not worth it. In my opinion, there are general rules that you can use for how long you're going to be in a trade, and then use that to figure out what time frame you want to be in. So I use like multiples. Man, this is a whole nother video right here. But I'll give you the short of it. I use multiples to determine how long I'm going to be available for, or how long I'm looking to enter this trade based on the time frame that I'm trading on. So if I'm trading on a daily, if I enter a trade on the daily, I'm expecting to be in that trade for, probably 7, 21, maybe a bunch of days more than that. But if I'm entering a trade off of the daily, I'm expecting that trade to play out over the next like 7 days, 21 days, 55 days, like something long time frame. So if I'm on like a 4 hour or something like that, if I'm expecting 7 4-hour periods, and that's just my personal like rule. You don't have to use that. I just use like 7 and 21, those fib numbers. And like, you could use like 34, 55, whatever it is you want to use. I use those particular numbers to determine the length of like the time frame I'm likely to be in that trade for. So if I'm trading on a 4-hour chart, and then I take the multiple of 7, a 4-hour chart times 7 is 28 hours. So I'm probably going to be in that trade for about a day, roughly. But if the trade just jumps right in my favor right away and then tells me get out, I'll get out. That's fine. That's, quick little scalp, boom, bang, that's it. Maybe I'm going to be in that for, a longer time frame. Maybe it's going to be, shorter time frame. You have to kind of play it by ear, to tell you the truth. But if you're on a 15-minute chart, what's that going to look like? Well, a 15-minute chart, if you're going to be in for 7 15-minute time frames, you're looking at probably around 2 hours roughly. Maybe it's 21 15-minute time frames, so just divided by 4, you're in it for, like 6 or 7. It really depends. 6 or 7 hours, you know what I mean? A lot of times a short time frame, a 15-minute trade or 1-hour trade or something like that, or a 4-hour trade will turn into a daily trade, and the daily trade might turn into a weekly trade, and the weekly trade might turn into an investment. But you get really good entries off of those shorter time frames, but they're less reliable, and you have to be ready to pull the plug if it goes against you. So here's our Bitcoin 4-hour chart, and let's see, would this have been effective, based on just our recent price action? So not even taking into account, let's just look at the entry on the 4-hour chart, off of like what this was mid-October 2020. So the 4-hour chart flipped bullish on the 200 back here, and it flipped bearish for the first time right here. So 443%. So yeah, I'd say that's pretty effective. We got basically a false signal right here where it got you in and then back out basically at the same price, less than 1% difference. So that's a wash, small loss, small win, doesn't matter. We don't care about those. All we care about for my trading strategy is eliminating big losses We let the small wins and the small losses cancel each other out. And then what's left? Only big wins, baby. Only the big W's. If we got out right here and then we got back in when we flip these back blue again, we avoided 41% drawdown or saved ourselves 41%. Or if here we had $1,000 in the market, the price went down 41%, and then we put our same $1,000 back in the market, we now have, instead of, $1,000 worth of Bitcoin at this price that went down to $600, we now have $1,000 worth of Bitcoin at this price. And then we take that same extrapolated gains each time it goes up. And again, same exact strategy. Cross above the 200, 821 cross to the upside, cross down below, still have a positive slope. Slope flips bearish right here, 40% gain right there. Flips back up to the upside right here, 821 cross to the upside, back above 200 exponential and simple. Slope is positive, and then, we lose the slope right here. Another 31% to the upside. So, does it work? Yeah, it definitely fucking works. 100%, my dude. Definitely works. And that's the beauty of this. And that's the beauty of the numbers and the moving averages and stuff that I use is because of the way Fibonacci works and the way it scales, and the Fibonacci, basically theory or whatever you want to call it works, using these Fibonacci numbers allows you to basically use those multiples on shorter time frames to achieve essentially the same thing. Because you'll notice also, and this is getting super deep into it, and I really want to keep this video moving or we're not going to look at anything. The way you look at it also is the shorter term moving averages. And I have another published script that has, what was the other one called? Man, I can't even think of it. It's been so long. It was the one I used before I created the TJD Master a few months ago. God, I can't even think of the name of it right now. Hang on. Oh, the parabolic SAR with binary pivots, or the PSAR with B pivots. If you look at that indicator, it has a bunch of different moving averages on it. It has the 8, the 21, the 34, the 55, the 200, all these different ones. And then some other stuff incorporated in it as well. The prophecy, that's it. Thank you, brother. That's how it started off, as the binary pivots one. And then it evolved into the prophecy, and then evolved or devolved into the simplified but better version, which is the master. And then I also have the Guppy on there too, where it's a bunch of moving averages, and when they flip to the upside, they all turn green. When they flip neutral, they turn gray. When they flip to the downside, they turn red. Those are all just more complicated versions of these, but in the end, I find that they were all less effective. But essentially, my point being that if you look at the amount of hours in a day, or the amount of 15-minute periods in a 4-hour period, or whatever, it all roughly, it's not perfect, but it ends up being Fibonacci numbers. So if you look at where the 200 exponential moving average or the 200 simple or whatever is on the shorter time frame, say the 15-minute, it will multiply out to a longer term time frame moving average of a shorter duration. So without doing the math in my head right now, a 15-minute time frame 200 moving average is going to be the 50 on the daily, if I'm doing that math right in my head. Because you have 4 15-minute periods in an hour, so that's 4. And then you have 24 hours in a day, so that's, so what is it, 100 then? It's the 100-day moving average. And then different time durations and different multiplications. So the hour moving average, let's say the 8-hour moving average is going to be the quarter of the daily. The 8-hour 21 moving average, man, I can't even do the math in my head right now. The 8-hour 21 moving average is going to be, or I'm sorry, the 1-hour 21 moving average is going to be the daily, because there's 24 hours in a day. And it's not going to be perfect, but essentially it allows you to look at a different time duration and still see the moving averages on the longer time durations. So they don't line up perfectly, but they roughly do. So a lot of times you'll see we're bouncing the 200 exponential moving average on the shorter time frame. And then when you go to the daily, you're that 200 moving average actually is lining up perfectly with the 50. You're that's crazy coincidence. But it's not a coincidence. It's Fibonacci numbers, and that's why they're so important. So that was a horrible job explaining what I was trying to say, but hopefully it made some sense. Hopefully it makes a little sense. But I mean, you can see obviously that it's effective strategy on different time frames. And you can go down, like I said, I don't really go down below a 15-minute. You could, but you start getting to like degenerate land at that point in time where you're like smoking 2 cigarettes at a time, drinking a Red Bull, like, you know, a hand on your junk, and you're trying to make like 3% so you can go get a Subway sandwich or something. Nah, it's not really my thing. A lot of times you end up scalping in and out of those trade setups, and then you would have been better off just trading a longer time frame and taking like a longer trade in one direction, because markets typically aren't that choppy. They tend to trend. So let's look at Ethereum next. Ethereum still well above 200 exponential and simple, still trading inside of our channel. We have broken down below the previous support level right here, and it's acting as resistance. We're below the 8 and 21 there across to the downside. We did get rejected off the heart line like we discussed, came back down to the bottom of the channel and found support once again. So now we know this is an extremely valid channel, as we have multiple touches on the top based on our daily closes, multiple touches on the bottom based on our daily closes. We see clear interaction with 200 exponential moving average, see clear interaction with the heart line and the 8 and 21 moving averages. So we know that what we're looking at is the same thing that everybody else is looking at least the people that matter, the market makers, the market movers, the Wall Street, the big dogs, the whales, all that stuff. And that's what matters. I don't care what Timmy, with his stimmy check is doing. I don't care what, Joanne, who's all in on Dogecoin, is doing. No, hell no. Keep your financial advice, Karen. Okay? We're using actual technicals here, and we're using what matters. And we see that because it continually works over and over again. So Ethereum looking pretty good here in comparison to Bitcoin, but obviously in a downtrend, looking weak overall. We do have a high, a low, a lower high, and now a lower low. So, could we potentially come back up here and just put in a lower high once again, come as high as 4,400? Sure, it's possible, but it's going to depend what Bitcoin does. Nothing's going to be strong right now if Bitcoin keeps being weak. And the most likely scenario, in my opinion, is we retest the 200 exponential once again, probably the 200 simple. So I expect another like 3,400 retest in the near future. We do see multiple green histograms on the daily. We're in the neutral zone. So Ethereum has like 2 things going for it. It's still above the 200 exponential and simple, and it has 2 green histograms on the daily. Everything else is bad for Ethereum right now. So, and if we go once again, just because we're getting towards like the end of the month and we got a fresh week going right here, we see once again we have that hard sell signal. We did get a hard sell signal back here and then rallied to the upside afterwards. We did get a hard sell signal right here and a massive dump, but rallied to the upside afterwards. But the most important thing is hard sell, exit the bullish control zone. So when we lose the red background and get the hard sell, we lose the red background and get the hard sell. That's when we're most likely to get the big sells, the big moves. And here we lost the bullish control zone and got the hard sell. And then again, we see off this peak right here, we have a high, then we have a higher high. We see off this peak here, we have a high, then we have a lower high. So again, we're seeing that same bearish divergence developed on the weekly, confirmed on the weekly. We have now broken down below the slope line. It is still blue. We have a bunch of red histograms below the slope line. Next step is the slope line flips over red, and then after that, we keep going down and eventually cross below the 0 if we keep going in that direction. And same thing here. We have crossed the blue and the pink to the downside for the stochastics, left the bullish control zone. We have the hard sell signal. So the next area we would look for support is the neutral area around 50. And then again at 20, we see we bounce the 20 level perfectly right here. And then obviously if we highlight the background green like that, it means the bears are fully in control. So Ethereum still hanging on for now, but it can't hold up crypto market on its own. ETH Bitcoin ratio, we have still confirmed outside of our breakout right here, came back down, retested it, saw a continuation, a new high, and now it's still technically bullish. We did get the sell by sell signal, fell back down, but found support. We're back above the 8 and 21, they're green. So again, no surprise here. It's telling us Ethereum is stronger than Bitcoin and continuing to stay strong, but it is starting to lose that strength. And then if we look at our total market cap, exactly what I said happened. We had closed down at the 21 right here and lost the 8. We rallied up and got rejected off of the 8 and then closed back at the 21 again. We then opened and closed and now closed below the 21. So now we have a confirmed close below the 21 and then an open below the 21 as well. No gap up or anything like that. No, saving this at this point in time. We have now officially closed below the 21 for the first time, since this move up. And the last time that happened was after that big move here. We were able to save the trend, but we did put in 2 lower lows on the weekly after that lower close right here. So this tells me that we have to be very careful we don't get a powerful move. Again, hard sell signal, left the bullish control zone, dump. Hard sell signal, left the bullish control zone. Haven't really had a big dump yet. People are still pretty bullish, I think, overall. Multiple red histograms, slope line is flipped over red. Multiple red histograms, slope line is flipped over red. The total crypto cap looks bad, looks terrible. It's been looking terrible. And then once again, if we pull up our drawing tool here, we'll see, obviously, oh man, there's so much going on here. But if we look at the red Fibonacci level, the red fib is from the top of the 2017 market cycle top to the bottom of the 2018 market cycle bottom. And then we see it projects our Fibonacci extensions here to the side. And look at where we topped out at, exactly at the 1.618 Fibonacci extension. So we see Bitcoin topped out exactly at the 1.618 Fibonacci extension. We see the total crypto market cap topped out at the 1.618 Fibonacci extension. So what does that tell us? This is a high probability that that was, in fact, the top of the market. It's not just random that all these shit coins ran up a ton. Bitcoin ran up a ton, and somehow all of them just so happen to coincide perfectly with the 1.618. You take all the shit coins in existence, all the new shit coins, all the total money and prices purchased for these and the way they calculate market cap, and we just coincidentally topped out at the 1.618, the same place Bitcoin topped out? The same place I've had this big red box drawn forever. And we also put in bearish divergence on the weekly, on the crypto market cap. Bunch of red histograms, hard sell signal coming out of the bullish control zone, angle to the downside, red slope. 821 getting potentially ready to cross to the downside. We're doing it. We're doing everything we've been talking about. And it's happening. And I wasn't saying the whole way up, oh, this is bearish, we're going to zero. Nope. I've been saying it since the top, since the tippity top. And not a moment too soon. And you know what the beauty of it is too? Is even after we called the top right here and got out, we still kept a bullish bias off of the triple bearish divergence. We had triple bearish divergence here, sold off. We bought back in with triple bullish divergence. And then we then capitalized on 90% of this move back to the upside. And now we're able to just step back off again and say, we'll just wait and see what happens, but probably doesn't look good. So we don't let our bias, we don't let this technical analysis blind us. That we say, that's it, the top is in. We're now just taking bearish trades. Everything's bearish. Bitcoin's going to zero. No, we use the technical analysis to continue profiting, whether we're going up or down, whether we're going down short term or up short term or vice versa, etc. Bitcoin dominance chart. Okay, I was hoping for a slightly lower close on the Bitcoin dominance chart right here, but we've been talking about this for a while. We have a low right here. We have a lower low right here. And then I was looking for a lower weekly close right here. This closed at 40.39%. This closed at 40.27%. So technically, this is a higher close. So maybe this week we get a slightly lower close. The reason I'm not saying, oh, I'm hoping for it because I hate crypto. I'm hoping for it because that's going to give us triple bullish divergence right here. So we have one low right here and one low right here. Then we have a lower low right here, but a higher low on our indicator oscillator, a higher low on our indicator oscillator. And then here we have potentially a lower low once again, a third lower low. And then we have potentially a third higher low on the indicator oscillators. 1, 2, 3. So we have potential to put in a third drive or three drives of bullish divergence on the Bitcoin dominance chart. So what does that tell us? Bitcoin would be ready to probably explode to the upside in comparison to altcoins. So what does that tell us? Bitcoin is either going to the moon faster than altcoins, or Bitcoin is going to the earth faster, slower than altcoins. So either altcoins are dumping bad and Bitcoin is just dumping, or Bitcoin is going parabolic and altcoins are just pumping. Which one of those scenarios is more likely to happen? Have we seen many times where Bitcoin went up and altcoins didn't go up exponentially faster? No, we have not. As a matter of fact, the majority of the time when Bitcoin goes down lately, we have seen the altcoins go down faster, but then recover faster as well. So one could argue that the bulltards, the cult, has never been stronger. So this tells me that if we put in a third drive of bullish divergence here, that there's more than likely, there's over a 50% probability that what this chart is telling us is that altcoins are about to get wrecked and Bitcoin is going to sell off. And that corresponds with the beginning of a bear market, which is also what, every other chart that we've looked at is telling us. And that is the weekly time frame. So let's see how our trades from last week played out. I mean, we already know, obviously. I put these trade setups on the channel. I specifically talked about some of them in the group, like with the explanation of stop losses, targets, etc., risk reward, probability, all that good stuff. But obviously, Avalanche was one of them. We have been operating inside of this descending broadening wedge. We found support at the 618 Fibonacci from the bottom back here to the top right here. That's a key buying level for us. We basically double bottomed right here. We're able to take the long. Our first target was a 25% move, which was taking us back to the 382. So we come from the 618 to the 0.5, from the 0.5 to the 382, and then also the top, which is resistance. We then saw a continuation to the upside and hit our second target as well. So we took 25% profit on the first portion of the trade, and then 46% profit on the second portion of the trade. And then I did obviously alert the group that I was taking profits on the second trade target as well. So that was again at the 236. So we bounced from the 618, 1, 2, 3 fib levels to the upside for a total of 46% bounce. And we'll see obviously that we topped out, almost exactly at our target. So well played. Touche to everyone else that took that trade with me. Avalanche crushing. Keep in mind the majority of the market did nothing. The majority of the market did absolutely nothing. So Matic was next. Polygon. So again, hit our target perfectly. We've been operating inside of this ascending wedge. A wedge is going up, but getting tighter on the way up. And then we see here, obviously we topped out on that last trade setup, 42%. We rebought back down here again at our blue box entrance, our target, before it even ever got down to there. That was where we were expecting, because it's acted as support so many times. And we have literally traded the same setup over and over again. We were able to take the trade entry around like $1.80. And then obviously this one underperformed. I think I had 2 targets on this for the... I can't remember if I posted this one in the group or not. But anyway, it only moved like 20%. So it wasn't underperforming. It performed very well in comparison to most things. But yeah, it did about 20% move. The main, obviously the 786 was the first target. And then the second target being the 886 for the internal retracement from the high to the low. We retraced 88.6%. Excuse me. And then... so that was over a 20% move, while the majority of the market did nothing. And then our next trade setup was Solana, SOL. So obviously been operating inside of this descending channel. We had this little push out right here. The initial break underperformed. And then we started operating inside of... this one is not as visible on the daily, so I'm actually going to switch to the 4-hour because that's what this trade setup was based off of. But we basically have... Let me turn off the moving averages. We basically have this little like descending wedge channel deal going on right here inside of the larger yellow channel. And then we broke out of the channel here, retested it as support. That was our entry. That was our target, obviously. And again, these have all been in place well before they were ever hit. And that gave us our entry basically of, it was like 157 was the trade setup I posted in the group, I believe, was the entry. 157. It might have been 155. I can't remember. And you know what? I'll actually read you off what these sound like, just so you can have an idea of like what I look at. This is actually a really good example of the type of stuff that I write. Just so you can have an idea of what I'm thinking, how I define my trade before I enter it. So I posted on 12/14, Solana, 4-hour bullish divergence developing, descending wedge and momentum beginning to shift for a potential bullish retracement of the bearish downtrend, a reversion to the mean retest of the 4-hour 200 EMA, lines up with the 0.5 from the top of the current low. Oh, I'm sorry. Yeah, from the top to the current low. Entry 150, stop loss 140, target $182, 20% move with a risk reward ratio of 2.5 to 1, target 2, 196 with a 28% move with a risk reward ratio of 3.5 to 1. So that's basically like, how I look at these trade setups, what I'm looking at, and then, obviously seeing them play out in real time, we can see we bounced from the bottom right here. We had that 20% move to the upside. We topped out exactly at the 382, which also just happened to double top at the top of the channel. And then if we turn on our moving averages as well, we can see, what is this play? It's the reversion to the mean, the retest of the 200 exponential. Just like we said, the whole reason we were taking it. And we see what I was talking about with the momentum shifting was the blue flipping back over here. And then obviously we were buying support off of the bottom of the channel. And our entry was the 150. So, okay, yeah, all right. So we literally bought like the bottom. I thought it was a little higher, but just being modest, I guess. But yeah, anyway, beautiful trade setup. That was our 3 main crypto trades that played out obviously perfectly. And then we'll look at some more cryptos, but you'll see that the majority of them did nothing. So we did what? 20%, 20%, and 25% and 40%. So you can't argue with that. Not a bad weekend, ladies and gentlemen. Not bad. Would like to get one more of those before the year end. Maybe a couple. We see SHIB is next. Shibonasti did nothing, still operating inside of our descending channel, doing absolutely nothing, breaking down to new lows below the 382. So our next target to the downside is the 0.5. Just assuming we will just stay inside this channel and just keep dumping. Who is this? This is all the wine moms. This is the doggy crypto cult. This is, all the losers buying the worst crypto that ever existed. Have I profited off of SHIB? Yeah, quite a few times. Quite a few percentage as well. But it's trash. It's total trash. So yes, I will take your PTA money. If I'm going to pay taxes that support all your illegitimate children and you decide to play in my crypto space, I'm going to take those taxes right back. I'm going to tax that ass. But anyway, XRP, still trash. Bear market below the 200 exponential and simple. Getting a little pop to the upside off of our blue line support right here. But, like always, if you just sat in XRP all weekend, it's just now up 11%. Meanwhile, we did 40%. So have fun, XRP. Constantly outperforming everything. Chainlink, again, bear market. Below 200 exponential and simple, 8 and 21 below them as well. Starting to build a little bit of momentum, couple green histograms to the upside. Potential for a reversion to the mean. A lot of resistance above our head though. The target on Chainlink would be like 21, and then after that maybe like 25, but this looks terrible. We're bouncing the 236, so we're technically still putting in a higher low for now, but does not look good. Does not look good. And again, I don't hate Chainlink. I've made tons and tons of percentage gains off of Chainlink, but the technicals are not good. Same with XRP. XRP is definitely trash, but it's put a lot of them trash dollars in my account, if you know what I'm saying. Polkadot. Even when XRP was getting delisted, and the SEC took it to court, I put out a target trade setup for 17 cents was my target. And I entered XRP at 17 cents. And then it ran up to $1 something after that. After everybody else was dumping it because it was getting delisted and all this stuff, we purchased it at 17 cents. So just because I talk trash about something doesn't mean I hate it. I'm just talking trash about the technicals or the project. But also I'll still make money off of it. And that's the beauty of not being biased with your actual trades. So Polkadot is next. Dot, again, looks like trash. Technically just confirmed a bear market. The 200 exponential and simple have both crossed the downside for the first time. This whole run up. This thing was bullish the whole time. The 200 exponential crossed red right here, or sloped red right here. The 200 simple sloped red right here, but never the two at the same time. And then here we saw the 200 exponential red again, and now we see the 200 simple red again as well. So the next trade that I look for once we switch over, the same way that once we reclaim the 200 exponential and simple, I look for the reversion to the mean, the retest of the 200 exponential and simple as support. When we break down below them, I look for that same reversion to the mean, the retest of the 200 exponential and simple as resistance. The difference being that I'm looking to buy support when we cross bullish. I'm looking to sell resistance when we cross bearish. Whether that's selling a position that I still have open, whether that's taking a short position, whether that's taking a long position, accordingly. But you'll notice that that's one of my key trades. One of my most successful scalp trades is what I call the reversion to the mean trade, which is just a retest of a 200 exponential and simple, either bullish or bearish based on the trend. Basic attention token. Yeah, I'm still out of this one. We obviously had some really, really nice trades on BAT. I did sell out of this one at like a $1.70 something, basically at the absolute top, just shy of our trade setup. But that was over. We capitalized on this over 100% gain, and then we got another 100% gain almost immediately afterwards. And then I've been out of this since. It did bounce our blue support right here, which looks okay. It did retest the 8N21. This one is much more bullish than most cryptos. It is still above the 200 exponential and simple. This looks much more like Ethereum. Not quite as strong as Ethereum, but still well above the 200 exponential and simple. So basic attention token, technically we want to buy the 200 exponential and simple on a retest. But again, just because one chart looks good doesn't mean we want to just jump right into it if the rest of the space is not looking good. But if we were going to take a trade in the near future, it would probably be on something like Ethereum or BAT or one of the other few cryptos that's still above its 200 exponential for a bullish trade. Uniswap, again, looks like absolute trash. Well below the 200 exponential and simple. Been trading inside this descending triangle forever. Basically retesting the breakdown of the descending triangle as support, or I'm sorry, the support as resistance now. I think this may rally back up here though, honestly. And I believe actually I have a... Hang on, let me look at something here. I think I was actually looking at Uniswap for a scalp on the shorter time frames. Oh no, I'm sorry, I wasn't. It looks similar, but it was Link I was looking at. Did I already go past Link? Let's go back and look at Link really quick. Can mention this while we're talking about it. Okay. Yeah, on the shorter time frames for Link, I was paying attention to this. It did not actually play out technically yet, so this is still a valid idea for us. But I'm basically looking at this. And this could completely fail. And I did not take this trade yet, but I'm paying attention to it because it looks like, and keep in mind, Link has a nice little cult following. It used to be one of the popular coins before all the new trash came out. This was like one of the leaders in this bull run. Even Litecoin. Litecoin was one of the earliest trades I took in this bull run. It basically led us out of the bear market. And Chainlink was the same way. It literally exploded to the upside before anything else was looking bullish. So what I was looking at was basically this break right here. We break, consolidate it, and then I was looking for the potential reversion to the mean, the retest at 200 exponential and simple, and the 382 from the bottom back here to the, I'm sorry, from the previous top back here to the bottom right here. So that was our all-time high on Link to the like swing low, and then the retest was of, you know, basically these key fib levels. So we hit like the 786 right here, found support at the 382, resistance at the 0.5, support at the 236, resistance at the 382, and now here we are back at the 236. So what I was thinking potentially could happen is if we got this breakout to the upside, and again, it doesn't have to happen. It looks much less likely now. It looked decent when I thought Bitcoin might have a bullish weekend, but it performed pathetically. But it would be a 15% move to the upside, or potentially even a move as high as like 2660. So again, not taking this trade setup now, but assuming we held support here and just went sideways long enough, it would look to me like a break of that resistance, and then I would be looking to basically take this trade setup. Oop. Is my mouse dying? I might have to switch to my other mouse. I like charge this thing like once every like 4 years. Even though it has a USB plug. You like never think about it until it stops working, and then you're like, oh, guess I could do that thing. Instead of doing it every night when I go to sleep, I could just do it when I need to once a year. Which I do love my mouse. It's phenomenal. Because it lasts for freaking ever. But anyway, so that would be basically what I'd be looking for a trade setup. A close below our previous low right here tells me I don't want to be involved in this. I don't want to be in this trade below $17 because we're putting in a lower low based on closes on the 4-hour chart. And then a breakout of this area, basically if we just go sideways, tells me I'm looking for a target of the 382, the 200 exponential and simple, which is a 20% move to the upside with a 9.78% stop loss, roughly 2-to-1 risk reward ratio. And that's the minimum trade I'll take. So this is the minimum trade I'll take is $2 for every $1 I risk. And then the next target would be the 0.5, which would be roughly like a would be a roughly 40% move to the upside with that 9.85% stop loss. So again, 4-to-1 risk reward ratio. So we flip a coin. If I'm wrong, I lose $1. If I'm right, I get 4. That's not bad. Maybe I took some profits along the way at 2. So maybe we flip 2 coins. I get $2 off this, and then I get $4 if that one gets hit. Or, I risk 2. We'll see what happens. Doesn't have to happen. Doesn't look particularly great, but definitely could happen. So that's one that I'm looking out for. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Speaking of trash. Oh, wait, I don't think anyone said trash. I think it was just subliminal messaging in my head. Cardano looks terrible. It looks literally worse every day. I mean, you're like, don't be mean to Cardano. But I mean, literally since September 2nd, it looks worse every day. Every day it just goes down. Goes down, goes down, goes down, goes down, goes down. What was this? Gogan. We got Gogans here. We got the Gogan, guys. Gogan. Gogan. And then Charles crying on exchanges, getting delisted, public service announcements. They're being mean to me and my crypto. Oh, God, what's happening? We're going to $10. We're going to $100, guys. Just hodl. Hodl. Stake it. Stake your coins. Everybody stake. No one sell. Oh, God. So Cardano looking like it wants to go to $1. Seeing some strength right here. I would not be surprised. Cardano is another one that has a strong cult. So I would not be surprised. Maybe the cult can find a way to get some money and buy some more trash. Some trash Dano. I mean, 37% move for the reversion to the mean, possibly more. Yeah, we'll see. I mean, it's bound to find at least a temporary bottom somewhere, but to tell you the truth, it looks weaker than most things. And breaking below that white support line is just absolute trash. And I mean, I talk a lot of trash about Cardano, but keep in mind, I got in Cardano at like 7 cents. So, I make fun of Charles a lot, like a lot. And I might think that he's a ugly bitch and that he sucks at life and he's a trash bag loser shill. But I mean, I'll still make money off of this project. That's fine. But yeah, Cardano, I'm not even going to put a trade setup out there because it still looks like shit. We'll see if something works out, though. I will let you guys know. Micro Penis Michael Saylor. MicroStrategy is the one. That's the one I was looking for. MicroStrategy, still looking trashy. I mean, broke down below that 615. That was our target. And honestly, it's probably going to open down. Especially if Bitcoin keeps seeing pressure. It broke down bearishly from what should have been a bullish pattern. You guys know my initial target's a 382 at 469. And then after that, the 0.5 at 344. And the truth is, the real area to watch when this thing starts looking real shitty is if we break down below 411. If we break down below 411, that's a high, then a low, then a lower high, then a lower low. So this whole area, I would expect some kind of reaction off the 382. I would expect definitely a reaction off 411, that previous support. But I mean, we're going to 350. Also, let's keep in mind, and I've been saying this for a long time, Bitcoin is literally, or was literally just at all-time highs, down like, 25% off all-time highs or something, 30%. MicroStrategy is down 59% off all-time highs. Down 59% from all-time highs. So this thing is massively underperforming. And then let's look at the actual MicroStrategy chart in case we got any new viewers out there that don't know anything about Michael Saylor and how much of a piece of shit he is and why I talk so much shit about him. Remember, Michael Saylor ran up MicroStrategy stock to $3,300 in the dot-com bubble of 2000, the explosion. And then he ran his stock up from $76 to $3,300 and then got in trouble for faulty accounting with the Securities and Exchange Commission, who decided to prosecute him and his partners and take them to court. And he settled because he's a fraudster piece of shit. He paid the bounty, the ransom for them not to put him in jail where he would have got his orifices stretched out. He bought them off with millions and millions of dollars that he stole from investors with fraud. And then his stock went down 99.87%. His stock went down 99.87% because he is a fraudster, scammer, piece of shit. Okay? It went from $3,379 to $4.25. So if you had bought one MicroStrategy, please, at the absolute top, yes, sir, this is a good investment, you would have paid $3,379. And then literally 2 years later, it would have gone in a straight downtrend and it would have been worth $4. So you would have lost $3,375 of your $3,379. You would have $4 left. That is why I hate Michael Saylor. That is why I think Michael Saylor is a piece of shit. Okay? It's factual. He's factually a scammer, trash bag, faulty accounting piece of shit. That's why I don't like him. And what did he do? What did MicroStrategy do for the next 20 years after that? From 2002 till 2020, for 18, 20 years from the top? It did nothing. It did nothing. Again, from the all-time high till, let's look at 2020, August of 2020, it was still down 96%. 20 years later, MicroStrategy was down 96%. So I'll just hodl this for the next 20 years and I'm sure I'll be back in profit. Nope, still down 96%. Michael Saylor, still a scammer piece of shit. That's why I hate Michael Saylor. Okay? And then what happened around that time? Michael Saylor, like a tumor, like a cancerous tumor, he discovered Bitcoin. And he got on the Bitcoin train and he became the marketing advocate for Bitcoin. The trash bag scammer that was now going to abuse a project that didn't have legal ways to go against him for doing this. So he basically said, I can make money off of this. I can turn my trash bag piece of shit company into something related to Bitcoin. I can go shill Bitcoin and I'll be the marketing department for Bitcoin and I'll just buy some ahead of time and then I'll market for it and then we can pump this thing to the moon. So that's one more shady scumbag piece of shit that's affiliated with Bitcoin and crypto. And still, after all that, after all the billions of dollars worth of Bitcoin, after $6 billion in Bitcoin, MicroStrategy still has not reached its previous all-time high. So here, it was a piece of trash software company with no Bitcoin. Here, it's a piece of trash software company with $6 billion in Bitcoin. And it's still, to this day, from the all-time high, still down 83.4%. So careful trusting any money with Michael Saylor. I literally wouldn't even trust a chewed up piece of gum with Michael Saylor. Okay? He's a scumbag piece of shit. And on that note, hodl. Robinhood still looks like trash. We did hit our target of the 1.618 Fibonacci extension. So that is from the IPO to the Moon Boy top. And then basically capitulation. This is looking pretty juicy for a potential long. I don't know. Stochastic looks like crossing out. If it finds support here and starts moving back to the upside, and we try to exit this bearish control zone, this is going to start looking pretty good for at least some kind of temporary retracement of the downtrend. But by no means will it go to new all-time highs anytime soon. I'm just talking about a scalp trade. And we'll have to even see. But it's definitely showing some potential for something. I think probably this thing's probably going to explode at the end of the year, beginning of next year, at least for some decent gains. Just because everybody probably just tax loss harvested this. I mean, a 40% move just back up to resistance. So, I mean, there's definitely some potential here. But let's just say you just bought Robinhood right when it, IPO'd or whatever. I mean, you're down 45% right now. So I'm sure a lot of people probably, took tax advantage of that. Coinbase, same thing. Absolutely just crushed. Just a trash bag company. And then also, obviously, stock as well. Down 26%. So, again, that short position played out perfectly as well. That was at 4-to-1 risk reward ratio, 6% stop loss off of the entry retest of the key Fibonacci level right here, and played out with a 27% move to the downside. Even if you took profits, like I said, in advance, which I would have done because I would assume people are going to front run and close out their short positions. That's all this bounce was. This was just people closing shorts and then the continuation to the target. So that trade setup's done. Once again, played out beautifully. So we hit our target to the upside, which is the red box, and then we hit our target to the downside, which is the blue box. So what do you do now? Well, I mean, you could try to take a long from this position, or what I like to do, I like to just sit back and wait. After a trade setup plays out perfectly, I like to let the chart develop. But it does look like this could potentially bottom here around this support level, but we're seeing no indication of that happening whatsoever on the indicator oscillator. So Coinbase looks like it's probably going to go down. And if it goes down, if it breaks down from here, I mean, we're talking about like, I mean, a new low for sure, below 200, probably much, much lower. And if Bitcoin goes into a bear market, probably much, much lower. Bed Bath and Beyond. I mean, it still looks like trash. Obviously, that trade setup played out perfectly. That was like 60% move to the upside. And now look, we're almost back down at the entry again. So what we're paying attention to with this is when we come back down here, do we put in a new low or do we bounce, put in some kind of divergence, like bullish divergence? Do we put in a higher low with bullish divergence? Do we put in a higher low with lower low with bullish divergence, I mean? Or do we just continue on down? Probably continue on down, definitely a bear market. But again, this was just that reversion to the mean. This was a combination gap fill and reversion to the mean. We broke down from a bull market, very clearly bull market, 200s are blue. We break down, they turn red and pink, and then leave a massive gap behind. Reversion to the mean, we gap up, we fill it, we retest the 200 exponential and simple. Trade setup is done. Bye, Felicia. Newegg, same thing, played out beautifully. This was just a long, just grind down to our blue target, green box right here. We took the entry off of that 1273. It exploded to the upside. Nice little like 46%. And obviously found resistance exactly at our other blue line. And then obviously right back down here. Now putting in a new low. So this is what we're looking out for on Bed Bath & Beyond. Does it come down and just put in a new low? Bearish control zone, red histogram, red slope line. At support again though, do we just take this trade again? You know, it's definitely a possibility. If we lose this support though, there's a decent amount of chop in the way. But I would expect, I mean, man, we just keep drawing support lower and lower on this thing. Eventually we're just going to get to zero. Like $8 if we lose this support. Does it bounce this area again? It probably does, but it probably underperforms. And if we look at the 200 exponential and simple here, the 200 simple has still not flipped over bearish yet. So this thing's technically not in a bear market yet. So maybe it goes to $14. This could just have one more pushback up, reversion of the mean play, and it hasn't played out yet. So there's an argument to be made for this. But I don't like to play the same level multiple times. Usually it plays out once. You don't get a second shot to take the same trade. So we see that same thing happen on AMC. We break down. We had the triple witching, or was it triple witching? We had a bunch of futures, basically, closing out. Yeah, triple, right? Daily, weekly, monthly. Or I mean, wait, weekly, monthly. God damn, I'm retarded. Obviously, futures is not my big strong point. But I mean, I know what I do, and I know what I don't do, or I dabble in occasionally. But anyway. So obviously the AMZ pushed back up. The futures contract closed on Friday. Basically that was the reversion play, the 200 exponential retest. So that had a nice little pushback up here. You know, again, once you break below the 200 exponential and simple though, that should be you exiting your position if you still have it open. Didn't quite make it to our target here though. My target was 2031 and it got bought up at 2090. Those little AMC fuckers, those little poop slangers. But honestly, it probably does end up back down here. $18. It's going 18. It just hasn't got there yet, in my opinion. You dirty little apes. Front running my target by 60 cents. Game Stonk, same move, just a weaker version of it. Again, below the 200 exponential. 200 simple hasn't quite rolled over yet. Hard buy signal coming out of the bearish control zone, rather. Looks like it's trying to move up here. That was the retest of 0.5. I mean, this is just a giant descending triangle at this point in time, though. It got to be dangerous. Depending how you look at it, we have a high, we have a lower high, We have a third lower high. We have basically the same low. So, I mean, honestly, I think this goes to 101. Man, that's so crazy. I remember when this thing was like $600. I also remember when it was $5. That wasn't that long ago. But it will be $5 once again. DraftKings just getting rectally destroyed. Did Kathy capitulate on this yet? Because I might buy some. If she quit, I might get in there. I'm not even going to do technical analysis anymore. I'm just going to buy SARK and just counter trend Kathy because she's the worst trader ever. The worst. But DraftKings, yeah, basically broke down, retesting support as resistance now. This thing probably heads lower. I mean, it's trying to bottom out here, though. We'll see. If it can get back above, what is this, 29? If it gets back above $29.30, I think this is a legit trade setup, which is the one we had in play. 20% move to the upside with a 10% stop loss. So basically what we're thinking is if it consolidates above here, there's 20% move back up to retest that previous support as resistance. If it breaks down below the close right here, we want to be out of this. So, but again, still am not entering this and have not entered it. We're still waiting for a confirmed candle close above like 29, whatever, 30 or 50, however you want to play that. So, yeah. So that's our cryptos and our crypto-like stocks. Okay, so let me take a quick swig and we'll keep on rolling, baby. And I'll jump in the chat, say what's up to anybody new showing up. Oh, my bad, guys. I freaking thank you, CW. I freaking took a drink and forgot to unmute it. Oh, sorry about that, dude. When was it muted? He said since TNX. Oh, yeah, sorry about that. Yeah, this is technically a bear market. So this has flipped over bearish. We're paying attention to the yield curve inversion. Just quick little summary. We made it to the 0.5 finally, but we're expecting a potential move to the 618. But there's just the risk reward ratio is not there for bonds right now, in my opinion. I would rather hold cash and get devalued slowly over time than hold bonds and get almost no return, but take a bunch of risk. And a matter of fact, if I was going to use my cash to buy something now as a safety play, I wouldn't buy bonds. I would buy gold. But again, that's just my opinion. And then the VIX we see is right down in our neutral area again. So as long as we're still in between the heart line of the macro channel, the sideways channel, and the heart line of the descending channel, this is neutral zone. So we're still neutral from anywhere from like 18 to like 21. So we got to pay close attention to this. We broke out of that channel, which was good. But again, until we start getting up here, we're not in the danger zone till red. And until we get down here to the green, we're not in like the complacency zone. So VIX not telling us a ton right now. Basically just neutral. So yeah, oil actually underperformed. You guys know I'm still macro bullish on oil, but we had a massive underperformance on that bounce right here. I thought we were going to get back up at least to 77. We did not even get close to it. We topped out at like 73, and now we're rolling back over, and it looks like we're going into a daily potential bear market. Thank you, David. It should be good now, hopefully. Hopefully you guys can hear me now. But yeah, sorry about that. I forgot to unmute it after I took a drink. I mean, what's that called? ASMR or whatever, where people just like make funny sounds into their microphone. I try to avoid like drinking and like sniffling or sneezing or coughing or anything into the microphone as best I can. But I mean, I know a lot of people are into that. Maybe I'd have more subscribers if I did that. You guys let me know. I'll drink for you. U.S. oil. Okay, so let's switch over to the weekly chart here. Obviously, we know the daily looks like it's going bearish right here. I hate this chart. So let's turn off the auto, and we're just going to scroll out here, and we're going to look at this weekly chart. This is what we've been paying attention to. So here we had a top, here we had a higher high, here we had a higher high once again, here we had a high, here we had a lower high, and then we had a lower high once again, which gave us triple bearish divergence on the weekly. And then here we have a high, a lower high, and then a lower high once again. And now we have lost the slope line, lost the zero line, and it's all red histograms. So we have triple bearish divergence, and it's playing out right now, getting rejected. And now we've crossed below the 8 and the 21 for the first time. We had a little false signal back here where it crossed below, and then we had a nice rally. So we're not going to get like completely bearish on oil or anything. But what I think is going to happen on oil, we're going to come down here and challenge the $62 mark, which $62 is just that previous bottom. Or somewhere around there. If we take that out, that's where our target comes in right here, which is basically $60, $59. And that $59 target is the retest of the 200 exponential and simple, and then also our macro support. If we like zoom way out, it's like the previous resistance from back here, and then previous support and resistance through this range. The support once we broke above it, and then obviously that would be the retest breakdown of it. And then also if we go to like the monthly chart, that's from like the all-time high to the peak high rate. Well, we can just do it really quick. Don't tell me, show me. So basically, that is our all-time high, and then resistance through here, and then resistance through here, and then we broke above it. So this would be like a break, a retest again. And then if this holds, we would expect continuation. If it breaks down below this, we know this is probably the macro topping back out. And we're just putting in a high, lower high, lower high. And then, we know every time the energy has gone into basically like, a parabolic uptrend like that, we know every time this happens, it typically plays out with a macro market top. And we can go back and look at, what I should have just done it while I talk about a lot of this stuff over and over again, but you can get like the in-depth on oil by just going to like my oil video, or like the in-depth on gold by just going to my gold video. A lot of these videos are like timeless. They're going to be good for 1 year, 3 years, 5 years. But this was our macro top all-time high in 2008. Actually, I want to go back to the 2001. This was 2000. So we had obviously a high right here, 2000. And then, this is obviously a stock market crash. 52% oil crash right there. And that corresponds with the dot-com bubble burst. 2008 was the housing market bubble bursting. And that's a 77% crash. So we know both times before we had a crash in the stock market, oil prices went parabolic. And then, depending on how you look at it, this was 2000. Our low was in 2020. So that was a 20-year downtrend. And then we put in a, potential even atom bottoming pattern, broke through the neckline, and then we're potentially going to get the remainder of the measured move, which we almost got. We were expecting like $100 to $115. So we're well on our way. But what we're paying attention to is, now is this going to end up being another one of those tops? And this corresponds basically with another macro, crash, which it doesn't have to happen right away. It could easily go on to mid 2022, even late 2022, early 2023, somewhere out into here. But it's worth paying attention to, because every time we have seen a massive stock market crash, we saw it correspond with oil topping out, energy prices going parabolic. And it makes sense, because if energy costs money, and energy is what businesses use to create value, if their costs go up, their profit margin goes down. Therefore, eventually, once their costs go up too high, once energy gets too expensive, it's not profitable anymore. And then it starts to slow the economy. And then the economy falls off a cliff. And then prices on oil go down. Everything goes down. So it makes sense. The cure for higher prices is higher prices in many cases. If the problem is the higher prices and there's not something else like a supply chain bottleneck, etc. So now traditional markets, Dow Jones saw a pretty aggressive sell-off right here. And again, one of the most reliable signals we see here is when the histogram comes up, the slope line stays blue, and then we get rejected at that slope line. That is a very, very high probability of success for a rejection. And we see that rejection taking place at a lower high right here. We see us coming out of the bullish control zone and probably going to be heading much lower. Again, we've been putting in a series of higher lows and higher highs through here. But I suspect we already retested the 200 exponential. I suspect the Dow Jones is probably coming back down to like 31,550. We'll see. Again, just because we're getting towards the end of the month and everything, I do want to pay attention to, once again, that weekly bearish divergence that we've been talking about for some time. We have a high right here. We have a high right here. We have a high right here that is lower. We have a high right here that is higher. And then we have a third higher high. And we have a third lower high right here. So again, triple bearish divergence on the weekly, not a good sign. And we are very, very far away from the 200 exponential and simple. And the previous time that we got that far away, was basically blow off top of, 2018. And then we essentially went like sideways to down, eventually retested the 200 exponential and simple. The time before that was coming off of like that 2008. And we basically didn't even get a blow off top. And then we essentially come back down and double test the 200 exponential and simple. So it's not unrealistic to think that we could be topping out right here in the near future of the Dow. But again, I don't want people thinking that I'm just bearish because I'm talking about like the short to midterm. You guys know my target for the Dow Jones, the 1.618, is 40,000. And my macro target for the Dow Jones is 51,000. But does not mean we don't lose 30% of value before that happens. All right. S&P next. So again, same thing on SPY. We have triple bearish divergence on the weekly, leaving the bullish control zone on the daily. Looking at that same rejection under the blue slope line here. This thing looks like it wants to come back down. It did not make it to 200 exponential and simple last time. So I do expect it to come back down to like roughly 432, something like that. So not a massive move, but looks likely at this point in time. NASDAQ at that green line support, 1, 2, 3, 4 touches, maybe 5 of that green line support. Do still expect it to come back down here slightly lower, at least to 14,634, possibly a little lower to 14,100. At that point in time, we would expect that to hold, as that was the previous high, ascending triangle breakout measure move that we hit. So this would just be a retest, a new high, a retest, and then we would see if we can get a new high again. A lot of times, and I'm not saying this will happen, but a lot of times what happens with this is we lose a key support line like this. We retest a breakout support line like this. And then that actually develops into something like this, where we put in a high. We come down here. We retest that line of support. It holds. We come up here and try to put in a new high. And we top out right around the previous shoulder. And then that actually gives us what amounts to a head and shoulders topping pattern. So again, does not have to happen. We're just looking ahead at what potentially could happen so we could be prepared for it. Because I guarantee you, the price comes back down here and gets bought up off the 200 exponential and simple, off this previous resistance turn support. Everybody's going to be like, that's it. We had the pullback, finally, over 5%. Now it's time to go to the moon. Everybody's back in. Let's go. 12% pullback. That's it. Buy, 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 buy. Buy the dip, buy the dip. I'm all in, bro. I'm levered up. And then we come up here. We put in that same resistance high right there, or lower high, and then we get rejected off of that previous support that we broke down on. It acts as resistance, and then come back down, retest support, and then we get the measured move break of the head and shoulders. And again, I'm not saying that this has to happen. I'm not saying I expect this to happen. What I am saying is this happens a lot. This is a very, very common signature that you see from markets, where you see this exact thing play out. So just worth keeping an eye on, especially when you have triple weekly bearish divergence. Oh, actually, I don't think we do on the NASDAQ, but still. Russell. So yeah, we got that throw over, the breakout of the channel, came all the way back down to the bottom of the channel, failed breakout, throw over, stop hunt, whatever you want to call it. We have now officially down below the 200 exponential and simple, and they now have, for the first time ever in this entire rally, a negative slope. So they're both red now. We are officially in a bear market for the Russell. And the Russell typically tells us before everything else does. So we'll notice that the main crash in most markets was in March. Here we see the Russell turn down was in February, late February. So the Russell actually told us when it took out this low right here and then flipped the 200 exponential and simple, it told us like 2 weeks before the Dow Jones and NASDAQ, SPY, etc. crashed. We actually got like a 2 week warning basically. This went into a bear market, and obviously from when it went into the bear market, it had a 40% sell-off. So, we definitely want to avoid 40% drawdowns or like getting wrecked. We're not looking to get wrecked. Because remember, if you lose 40% of your value, you now only have 60% left. So now you have to have that 60% go up by like another 60%. Because if you have $100 and then you lose 40 of it, you now have $60 left. So in order for that 60 to go back to 100, you have to make $40. So what percentage of 60 is 40? It's 66%. So a 40% drawdown or a 40% loss of your principal, in order to recoup that, 40% will not get you back there. You need to have a 66% gain. So if you lose 40%, it's the equivalent of needing to gain 66% to get back even. So it's much more important to protect yourself from losses, because if you just sit there and eat the loss, you lose out on those gains. If we get out of the market now and then we have a 25% drawdown and then we rebuy at the bottom, we exponentially make more money than if we just sit in there and don't capitalize on those gains. That's why it's so freaking important to just protect your principal, protect your capital. That's number one priority. Number one bullshit. Protect capital. So yeah, looking terrible at support right now. We'll see if it holds. I mean, it's just been trading in a range forever, and it looks trashy. I mean, technically in a bear market. So let's look at our sectors, and then I'm probably going to wrap after that, guys. This thing went longer than I wanted to, but if you missed the beginning of the stream, make sure you check it out. Alternatively, that's going to be like the TJD Master, how to use indicator course, whatever bit. So it'll be published as like a snippet later on anyway, in the indicator series. XLE, energy sector. So what's going on with energy? So we're topping out at resistance. We got that inverted head and shoulders played out nicely, measure move. We're holding support for now. We don't want to break down from this level. Looks a little sketchy. We are still hanging on to the 200 exponential and simple. I would expect it to act as support. But overall, we are about to get the sell cross on the stochastics, a bunch of red histograms, and a red slope line. So energy does not look great. And to tell you the truth, oil doesn't look great. So if oil breaks down from here, it's probably going to drag the rest of energy down. Also, if we have a particularly warm winter, which I can't speak for everyone, but so far it's been pretty mild. It was like 70 degrees here yesterday, so that's not bad for like the end of December. I know it's not like that everywhere, but you know, everybody was scared, and all this natural gas prices and oil, and you know, everything ran up because there was like not enough supplies. Well, you know, it's a good way to like have plenty of supplies, not need them because there's no demand because it's warm. So it's looking more and more likely that that's going to be the case. XLB material. So far, it looks like we're putting in a lower high. It looks like it's rolling over right here. I expect further downside, retest of this $84 range. XLF financials. So fell slightly short of the 1.618 target. Came back up here. Put in a lower high so far. Looks like it's going to roll over. Yeah, it looks like it's rolling over. I think we do touch the 200 exponential and simple. We have not touched them since we broke above them back in November of 2020. So this would be our first actual retest. I thought we were going to get one right here, and we front ran it big time. So I would not be surprised if we got it now. So I'm looking for like 37 to like 36.84. Not a big range, but XLY, consumer discretionary. Oh, excuse my yawn. Boring myself. Consumer discretionary. Still looking pretty toppy right here. Looks like it's coming down to like 185. The retested 200 exponential and simple. Yeah, looks like it's coming down here. I'm expecting it somewhere around there. So we'll pay attention to that. We could see some kind of support on this kind of line as it comes back to it. We're basically getting, this was basically our double top, or however you want to call it, head and shoulders, whatever pattern going on. And then this was just our measure move if we broke the neckline. And we've almost completed that measure move. So I would expect some kind of support around this cluster right here. But I do think it comes down to the 200 exponential and simple. Consumer staples. Okay, so we talked about what we thought was going to stay strong. Utilities, consumer staples, and well, real estate's been looking pretty good lately, but we'll see how it looks. But consumer staples, utilities are total safety plays because people are still going to need to buy the same amount of. Think about consumer staples as like the stuff that people just buy to like for everyday life that they just need regularly. It's a sector of just like basic essentials for like regular people. So it's going to stay strong. What else do you need no matter what happens, whether the market's bullish or bearish, when it goes to risk on or risk off? What's still good? Utilities, because everybody's got to have utilities all the time. Because again, it's just, you know, it's like the cost of just existing as a human. So I expect them to be strong and act as safety plays in much in the same way that the dollar or bonds do in different scenarios. So XLP consumer staples still looks good. It did kind of break out of that range right here, retesting it as support now. If this holds, I think it goes much higher. If it breaks down, I think we come back down to like the 71.50 range. Technically bullish control zone. This does look very strong in comparison, but if the markets are weak, it's probably going to sell off, but less than most other things. Healthcare. Oh, did I mention healthcare? I don't think I did. What did I say? Utilities and consumer discretionary. Yeah, I can't even remember. My bad, guys. It's been a long day. It's been a long life. The other one is healthcare. The other one that I would expect to stay strong is healthcare. We broke out of the previous high right here. Again, looks very strong. We do have our measured move target to the upside for the flag pattern. Once we broke through resistance here, we expected to break through resistance here at 137. And we do expect our target to get hit at 143. So yeah, healthcare still looks strong. But again, we could see some weakness, but I would expect this to be stronger than most other sectors. Utilities, yeah. So I mentioned utilities. Again, we see that same breakout from the previous high right here. We see it acting temporarily as support. We'll see if that holds. But again, it looks good so far. So yeah, I want to see if that holds. Obviously, bullish control zone, bunch of green histograms. We're seeing a little bit of weakness, but again, I would expect this to stay stronger than most things. And we do have some pretty aggressive targets up here. Initially at like $75, and then finally the long-term trade setup up here in like the mid 80s, mid to low 80s. But overall, just still operating inside that ascending channel. XLK Tech still look decent here, but that's a big juicy red candle. We did fill that gap, so that's good. What's going to happen with Tech though? Bearish divergence on the daily. So we have a high here, we have a higher high here, we have a high here, we have a lower high here, we have a lower high here. So we have our initial drive of bearish divergence. So if we break down from 165, that's going to be like the danger zone. So that's what we're paying attention to. If we break down below that 160, what the hell did I just do? If we break down below that 165 level, we would expect the measure move of, basically from the top to the support right here. So pay attention to that, and that would basically put us down in line with the 200 exponential and simple. Assuming they're going to keep going to the upside, probably put us in line somewhere around like there, maybe a little further out. But that's what I'd be paying attention to with that bearish divergence. Communications still one of the weakest sectors. This thing's about to flip bearish into a bear market. It's building some momentum. It still looks like it wants to retest this breakdown. I think this is still coming back up to $80. But it is below 200 exponential. 200 exponential has flipped over bearish. 200 simple is basically flat. It looks like it's about to roll over. So one more pushback up here looks likely. But I think it's a rejection. It's the reversion rejection followed by continuation to the downside. XLRE. Real estate still strong. As long as rates look weak, which they do, I would expect real estate to stay strong. If we start to see rates going up again, with the taper, the tightening, the raising of the rates, the Fed Reserve policy, blah, 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 I think real estate takes a hit. But in the meantime, still looks good. Still on our way up to a target right here. Which again, you're not going to get, there's no money in this stuff right now. Like, better off buying actual real estate than trying to trade the sector at this point in time, just because the moves are just so docile. Maybe we're just spoiled from crypto and meme stocks. Transportation, I really thought this was going to stay strong until year end. We'll see what happens. But we're basically just hanging on to 200 exponential and simple. Hail looks terrible. Full on bear market now. The 200 simple is rolled over. 200 exponential is rolled over. This looks like trash. Looks like absolute trash. Think about how many overpaid used cars and new cars that they had to buy because they dumped everything when we went into this. Bought back all these cars. Caused this fake boom in used car market while we had a shortage of new cars. Hertz was literally bankrupt, and then all of a sudden it's $1 billion company, multi-billion dollar. We're profitable. We're going to raise some funds. I don't think so, bro. Weren't you just bankrupt yesterday? What? We're not a meme stock. Pave, that infrastructure play. Looks pretty toppy right here, at least short term. Looks like it wants to roll over. I'm expecting this back at 26. Sorry, I'm kind of running through these guys. Jets. Still looks terrible. Full on bear market. This thing this looks like a bloody waterfall just ready to just flow. Does not look good. We hit the first target, the 382, next target 0.5. I expect this at $18 very soon. And let's just keep in mind, this is terrible. This is garbage, straight up garbage. Broke a key support, and this thing topped out in 2014. Airline industry is trash. UPS, and they're going to keep up with vax mandates and restrictions and restricted flying internationally and less business travel. And you pitch me where air travel goes back up to new highs anytime soon when the last high was 2014. Give me that pitch. You can't because it doesn't exist. I'll save you the work. UPS, pretty aggressive sell-off right here. Not surprising after that rejection, shooting star candle. So again, that single candle gave us a little clue that we're potentially topping out, or at least short term. I did expect this to run until the end of the year. Don't expect it necessarily to get above 217. Don't expect it to break down below 190. But it doesn't look great now. Nice trades in UPS, but it does not look great. FedEx had a nice little pop higher. Finally, I thought this thing was going to underperform forever. Had a nice little move up here for the initial one. Finally tagged the 200 exponential. Is it going to get up here, the 200 simple, and hit our trade target? I don't know that it's going to get up there. I really don't. It's definitely still possible. I think they had a nice little earnings call. I didn't actually listen to it. So let's see. Reported 483, standardized was 389. Or I'm sorry, the estimate was 423. The reported was 483. So they had a beat on earnings of 12%. That's good. And then revenue, again, they had a beat of almost 5%, $1 billion beat. That's not bad. Reported 23.5, estimate 22.4. So not bad. Not bad. Still extremely underperforming and full on in a bear market. And then not only did this pop up here, gap up, it got a massive rejection too. I would like this to come back down to 242, fill the gap, find support, and then see continuation up to 270. But in my opinion, 270 is an absolute selling opportunity. We did find support at the slope line right here. Got to be real careful though. Technically it didn't print daily divergence, so that's good. This probably comes back down a little bit and then goes higher. Maybe it just goes higher right away. Looks okay though. What do you want to do? Let's look at the dollar really quick, and then I think I'm gonna call it there, guys. We've been going for about 2 hours and 40 minutes. Yeah. Oh, so DXY. Once again, everybody trying to get bearish on the DXY, and there's nothing bearish about this chart. We were in a long downtrend for a long period of time. We're above the 200 exponential on simple. We had double daily bullish divergence off the bottom. We put in a W bottoming pattern or an even atom bottom. We broke through that. We even had an inverted head and shoulders playing out, hit the measure move to the upside. We're now at resistance, testing that resistance. So we expect it to chop around here. The longer we chop around at this resistance, just think about it as jumping on your bed and hitting your head on the drywall. You hit it one time, it puts a little dent. You hit it 2 times, some starts to fall. 3, 4, 5, 6, 7 times, eventually your head's going to go through the ceiling. And that's exactly what's about to happen. The more times we hit our head right here, the more likely we are to explode to the upside. And if we look at the weekly chart, it's extremely bullish. We look at the weekly chart, we were in a downtrend since July of 2020. And we had obviously well below 200 exponential and simple, broke back above them, flipped them back over to the upside. And now we're just, moving. This thing's moving. Bullish control zone, all green histograms, blue slope line, all things point to bullish right now. And then finally, if we switch to the monthly chart, we'll notice that it happened. It finally happened. The thing that we've been talking about, the thing that we've been waiting for, finally happened this month. We were in a monthly bearish downtrend on the DXY, the dollar in comparison to a basket of currencies, since March of 2003. This was in a downtrend. Since March of 2003, bear market. We finally confirmed a bull market in December of 2019. Now we retested. This is our reversion to the mean, the retest of the 200 exponential. Put in a bottoming pattern. We put in monthly bullish divergence. And now here we have crossed the 821 back to the upside. So we had a hard buy signal come out of that bullish control zone. Stoch's powerfully angled to the upside. We have a bunch of green histograms. We crossed above the 0 line, above the slope line, and the slope line is flipped over blue. We're above the 200 exponential. We're above the 200 simple. They both have positive slopes to the upside on the monthly, and the 821 has crossed over green. DXY is probably going to new cycle highs. I would not be surprised to see this thing over 100. The DXY is bullish on every time frame. This is literally one of the most bullish transitions we have ever seen. I mean, it is the most bullish transition we've ever seen on the dollar. The dollar has never looked stronger as long as this goes back. I mean, we've done nothing but put in lower highs on the dollar forever, and now we're putting in a bottoming pattern. And, obviously we only have 200 months going back to like the 1980s, but we never had a blue slope line on this previously. You could argue probably somewhere around here we were in a bull trend in like 2001. But if the dollar went on a rally from 95 to 2001, and now we're going on a rally from, 2008 to who knows? Looks pretty good. People hate the dollar. They want to talk trash about the dollar, devaluing the currency. Looks pretty good to me. Technicals look strong. So, but what do I know? Maybe the technicals are wrong. But every other chart we've ever looked at, that would look good. If this was the Bitcoin chart, everybody would be screaming, Bitcoin's bullish, it's going to new all-time highs. If it was the bond chart, people would be like, bonds are bullish, they're going to new all-time highs. If it was Tesla, they'd be like, Tesla's bullish, it's going to new all-time highs. It's a DXY, they're like, dollar's garbage because fundamentals. But yeah, that's going to do it for today, guys. Appreciate everybody. Yo, Billy, what's up, brother? Oh, I missed your message. Message retracted. It was probably, hey, we can't hear you, fucker. Total Grasp Fitness says, hey to you, my dude. Or probably dude, but maybe lady, I guess. Total Grasp Fitness says, can you tell us what would be the price to join the group in the new year? I haven't decided yet, man. Previously, it was $100 to join, and then it was $80 a month, like indefinitely. But I think I'm probably just gonna go to like, I don't want to up it too high, but I want to still make it worth my while. I'll probably make it like $250 total, and that's just permanent lifetime access for as long as the group exists till I die or decide not to do it anymore. And it's only going to go up over time, but that would give you access to the TJD master as well, and then future indicators. But I might be selling myself short on that too, because realistically, 1 month at $100 or joining $100 and then $80 a month after that, that's really like 3 months. So it's kind of selling myself short. So I don't know. Maybe I'll make it like 300 or 500 or something. I don't want it to be out of reach for people either. I want it to be like reasonable and useful for people. So that's why 300 to me sounds like a pretty fair deal. But I don't know. I haven't really decided yet, to tell you the truth. Or 250. I don't know. We'll see. Maybe I'll make it $1 million. $1 million pennies. No, wait. That's not good. But yeah, I don't know. Well, I'll decide. I haven't decided yet. I really haven't put that much thought into it. It's much more about me having people in the group participating and learning over time, making it a high enough price point that it's worth me having to deal with a bunch of new people, because I keep the group pretty small. But also, I want there to be a barrier of entry, because I don't just want like idiots to join and be annoying and have to like regulate all the time. But at the same time, I kind of like the idea of people just paying a little more upfront and then getting permanent access. Because I understand that like bull and bear markets happen. Some people can't trade like every day. You might have a couple weeks or a couple months where you're really not participating that much. Like it's cyclical because of your job or because of, whatever you have going on in your life. So I don't like the idea of feeling like if people are busy for like a couple weeks or a month, like they just like are hemorrhaging, it's $80. It's not a lot of money, but it's still, if times are tight or whatever. But I mean, realistically, let's be real. If you're trading with, I don't even know what a normal number is. If you have a multi-$1,000 portfolio, not like hundreds of thousands, let's just say you have a $10,000 portfolio and you have it divided up into 10 portions, that you're going to trade with. And each trade you take is going to be $1,000. Probably like once a week, one of my trade setups pops off for like 20 to 40%. So I like to think that it pays for itself pretty easily. Realistically, if you're trading with a couple $1,000, it pays for itself probably every month. I'm sure there's some months where it does a little less and other months where it does much better. Or maybe you miss one of the best trades of the month or whatever. But I don't want people to be like kicking themselves if they miss a trade or if they don't get to participate. I want, it's really more, it's more of, like I say, like a contribution to like help support the channel and keep me positive and coming back than it is like, oh, I need this money from you guys. Because the truth is I don't, but at the same time, I do put a ton of work into the channel and the group and also obviously the indicators as well. And I share all my strategies, my trade setups, everything for free. I offer a lot of cool perks as well. Like anybody that does, a trade journal or, trading plan or anything like that, I offer it. There's a bunch of like random like tool, like charts and stuff like that, divergence charts, just random things I post up in there. And then obviously the trade setups. I show a lot off on the channel, but they're not in real time. I do these streams twice a week. So I can give you a trade setup ahead of time. Something might change in the meantime. I might not take that trade. I might exit out of that trade. In the group, everything's like real time. So I literally like post up like, hey, I'm taking profits on this trade, or hey, I'm taking an entry on this trade. And if you heard like, what the trade setups and stuff sound like, but it's more about learning than it is just like, I don't want people to just like follow me and try to take the exact same trades I take and all that. It's really not for that. It's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Obviously, it's more about me telling you what I'm doing and explaining why, and then you using your brain to make discretionary moves for yourself. But it helps if you have real-time access to me versus just asking me a question and then me commenting on it like next week or something like that. So But yeah, that's it. I'm going to wrap it up there, guys. Definitely appreciate you guys. 300 Bitcoin, of course. Alternative Justice says 50M. $50 million. I see. And then he says 100K at Tradish. Yeah, I mean, if you're doing 100K at Tradish, I mean, you shouldn't have no problem reporting my group, bro. I keep it pretty reasonable. Appreciate you, brother. Definitely thank you for coming, man. And appreciate you as well, Total Grasp. Everybody that showed up. Sorry I missed you there, Billy. Everybody that showed up, commented, watched today. I appreciate each and every one of you. Everybody that supports the channel, everybody in the trade group. Hopefully you guys had a fucking nice and profitable year. No, I did. Absolutely crushing. Depending on what happens here with stocks, cryptos, whatever assets, we're going to have another year. Like Jim Cramer says, there's a bull market somewhere. We just got to find it. Is it going to be in metals and mining stocks next year? Is it going to be in pot stocks? Is it going to be in meme stocks? Is it going to be in some new crypto that we don't even know about yet? Is it going to be in NFTs? Well, there's somebody else for that. For the NFT thing, there's somebody better than me. So I don't know who it is, but it's not me. But for everything else, for all the rest of those things, I'm your guy for sure. But that's it for tonight, guys. Appreciate you all. Thank you guys for participating, commenting, all that good stuff. If you missed the beginning of the stream, highly recommend you go back through and have a look, or keep your eye out for the snippet later this week. I do stream every single Sunday and Wednesday from 8 p.m. Eastern Standard Time till roughly 10 or 11 p.m. depending. But yeah, that's going to wrap it. Make sure you tune in for our next one. If you are interested in the group, you can get a hold of me through, just send me an email, and I'll get back to you in the next couple days. If you email me or whatever, show interest or commit before the end of the year, we'll work something out. But starting the new year, it's definitely going to go to whatever the new pricing plan is. So, but yeah, that's it, guys. It is 10:51 Eastern Standard Time on Sunday. Crypto Trend Trader with our Sunday evening market look ahead. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. That's it for tonight, guys. Take care of yourselves. Take care of your families. Protect your principal. And, lock in those gains. And I'm out of here.